historical multiples for that. And this even leaves out sort of where I thought you were going, which was just the skew in long-term stock returns, meaning, the Henrik Bessemer research of like all the returns for the index level over time really come from like 2% of the companies.
Right.
So from this point forward 20 years, how many of the current Mag 7 today are going to continue to be the massive outperformers? And like that seems to be a question people are less sure about the answer to now, certainly than they were 3 months ago, let alone a year ago.
Yeah, I mean, well, there's a couple things to be said about all that. First of all, it is really it's crazy that they're shifting toward being these operators of these hardware heavy warehouses.
Like GE, right? They're doing more to GE or something.
Or maybe like an oil refiner, right?
I mean, yeah.
So I think there's a couple things to be said about that. One, when you become that capital intensive, you also become very inflexible, right? Like if your entire cost structure was like software engineers, you can lay these people off anytime you want. Unfortunately, for better or worse, you give them a year's worth of severance and some health insurance payments, and that's it. But when
you can hire them back in a year,
and you can hire
business term, which they often do.
You can't do that with the data center that has 10 or 15 years of depreciation.
Yeah.
And if that goes sideways, you're still eating those costs as or you have this massive lifetime, which makes your balance sheet shrinks by this huge margin. But another thing though is like something that you learn from the refiners and stuff like this is the way.
Good morning. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, March the 30th. We got about 10 minutes to go for the opening bell. Just getting ready.
Here's the thing about a lot of these companies. Almost all the Mag 7, if not any company that's over 30 or 40 years old, has completely changed their business model since inception. So it's like we can't think of anybody as like a static operation. Like the companies that do survive over long periods of time are not defined by the products and the goods and services that we provide today. It's very savvy capital allocation.
Yeah.
And so it's quite possible that 10 years from now, well, one, maybe these companies do stick to something that makes them shrink as a share of the market, or there's a new opportunity 5 or 10 years from now. They get in front of it, and suddenly they're in a completely different industry that takes a
have been sold off with this, recent downturn. So, I mean, even a classic name like the big juggernaut Nvidia, I mean, it's trading at 20 times forward earnings. So, it was just probably, gosh, I don't know, a year or two ago, that we were trading at 40 times earnings on that name. So that's come down significantly in valuation, and the long-term runway. I mean, we can't get enough compute power out there. So the demand is just insatiable. So yeah, there are plenty of names out there. Alphabet's one as well, but the entire space, to me, speaking broadly, looks really good.
Oh, seems like Alphabet, Nvidia, Palantir. How important is the jobs report to you on this Friday?
It is important. It is not important as geopolitics, but I'll certainly be watching it. We're looking at pretty subdued jobs numbers on the job growth front. I've been keeping a pretty tight eye on weekly claims. They're in the low 200,000. So we haven't seen too much pressure on the high frequency data. We have seen obviously a small tick up in the unemployment rate itself, the headline number, but there has been some small drags in the labor market, but it's nothing that looks too concerning as of right now. Honestly, I'm more worried about the geopolitical situation and inflation than I am worried about a soft job market.
Yeah, I mean, there's talk even that the Fed could raise rates by the end of the year. Jay Powell will be speaking, so we'll see whether or not he even alludes to sort of anything like that. In the meantime here, when you think about the tech plays,
that has been my favorite group for quite a while now. So tech, or somewhat tech adjacent. My favorite space in the market. I do like financials as well. They have not had a great start to the year, but I think the tailwinds are still there for the financials. We got the relatively strong economic growth, strong capital markets activity expected on the year. So yeah, I like financials as well. But yeah, financials and tech are kind of my favorite sectors. And yeah, I definitely still do believe in the tech trade.
Going to cash. Your thoughts on putting some cash on the sidelines right now? I mean, we've had 5 weeks of selling, and I heard somebody this morning, who actually told me personally, just called the broker and said, I'd like to sort of up my cash a little bit. I'm nervous. What do you think of that?
Well, it is an option. There's really not a place to hide right now for the most part, except for cash. So we've seen gold take a hit in this recent downdraft since the war started. Obviously, with inflation risk, bond yields are going up, so you're not really getting any help there. So if you did want to, make a move, moving some cash to the sidelines is an option. We have not done that yet. I'm not saying we wouldn't do that. It's not a near-term plan of ours, but it's probably the best option of the kind of the risk-off options you have available to you.
Yeah. All right. Well, Mark, we'll continue to follow some of your favorite groups, tech and financials too. There was some talk about Citi maybe making an acquisition, which they at this point were not confirming. That's for sure. Maybe even denying it a little bit. Mark Gibbons Capital Management. Nice to see you, Mark. Thank you. Coming up, we'll take a quick break. We have some up hours in our futures this morning. The opening bell. We'll be right back.
All right. Got 5 minutes to go. 5 minutes to go. Just going to make some coffee. I'll be right back.
And the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, podcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to meet your trading goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Opening Bell. I want to count you down to the start of trading. I've been noting that oil is higher, stocks are higher. That's an unusual sort of setup. You did have the president saying they're making progress as far as Iran goes, and 20 ships going through the Strait of Hormuz. Sam Vadas is with me, has a lot of details on what she's been watching so far this morning. Some of your thoughts.
Well, stocks higher, oil higher, as you mentioned, yields lower. I think that's part of the story, Nicole, as they have been coming off a bit. Perhaps we're rethinking just how many rate hikes the market had initially been somewhat pricing in off the back of this energy shock. Now, there's a big debate in the market that I've been listening to this morning, looking at a lot of the analyst notes that have been coming through over the weekend right now. This debate, Nicole, over inflation shock versus growth shock. And I think that's really going to be the big focus for these markets as to why we see this treasury market sort of bouncing around at the moment. Edgar Denny was speaking about that this morning as well, how, obviously we've seen the bond vigilantes, the so-called bond vigilantes back in full force. Obviously, this is to do with the price and the term premium, but also some of the longer-term inflationary pressures and expectations here. But they have been coming off a little
Apple's getting bid up at the moment. Apple.
We saw that actually hitting a 10-year high.
New York Fangs bouncing off of last week's lows. Not a whole lot to get excited about at the moment. If you're considering that there might be more downside, like I am, that this is just a short-term reprieve. I'm watching all of the signals, and we'll let you know what we do. But any kind of bounce over the next couple of days, I might do some put flies or a inverse fund, as I mentioned in the weekend video. I'm not convinced this is all over with yet. We are experiencing a nice little bounce so far, so that'll give us an opportunity, if you need to reduce some of your exposure to some maybe losing positions. Put together some cash. Just an observation. So we'll see how the markets start off today. If we can get a trend after 10 o'clock. Okay, we're about to open here. So we got markets up, crude oil up, yields down. Yields having a big impact on the New York FANG components and tech in general over the last 4 weeks. So we want to see the 10-year yield pull back. Okay, 10-year yield, we want to see that drop off a lot. Okay, we are open. Markets are open. All right, Bitcoin got a little bounce. High ticks. All right, tick cumulative is turning back up. Tick cumulative yields down. Okay, let's see what is actually leading the markets this morning. We've got Palo Alto Networks, CrowdStrike, AstraZeneca, PayPal, Strategy, Team Atlassian, Workday, Fortinet, AMD, Applied Materials, Meta, Zscaler, Lam Research. Where's Micron? Micron doing anything? Let's see what Micron's doing. Micron up a bit. Micron. It's actually flat. Micron's actually flat right now. Oracle up 1%. Bitcoin's up. Bitcoin's up 3%. Palantir bouncing. So it looks like probably just short covering for now.
If you build it, they will be there to use it. They being the likes of all of, any number of their customers, including OpenAI being a key. You mentioned Sora and OpenAI's decision to mothball that, if you want to call it. Rather serious decision. Right. The video generation tool that we had Bob Iger and Sam Altman join us not that long ago talking about a partnership that they had in which Disney was going to invest as much as $1 billion in the company and license or allow its
Okay, USAR bounce. USAR.
there they were talking to us. That was back on December 11th. You see that. No longer the usage of compute was enormous for Sora, and it didn't cost them money every time anybody went on their whatever it was.
All right, extreme high tech.
Given all of the different efforts they have underway at OpenAI and the need for compute they have, broadly speaking, I'm not sure what we're looking at there. It's a cat riding a figure skating national security drone.
Okay, let's see what's actually moving right now. Okay, we got an inside day. 200 day is way overhead. 10-year yield. Big gap down in the 10-year yield. That's huge. Okay, futures, seeing a little profit taking right now, futures. Okay, Apple bounced and then dropped just now. Apple. All right, futures are starting to fade. Let's see what crude oil looks like. Crude oil, I'm not expecting much. It is higher. Top of the range. All right, AXTI. What are you doing, AXTI? Okay, stocks that are up the most this morning. These will probably stay here. We got Palo Alto Networks, CrowdStrike, 3-candle reversals. Best Buy was active last week. Best Buy may continue. Datadog, inside day. Coinbase, we got a rally in Bitcoin, Bitcoin rally.
the dog was named NVIDIA years ago. Now I'm just going to call you NVIDIA.
And I don't mind that. I'd like
You would answer to NVIDIA.
I am the best performing.
You got a show. What's your middle name? You got a middle name? You want to share it?
Middle name.
Chevron?
No, I don't.
Oh boy.
NVIDIA better
I used to be Mr. Softy. I'm no longer Mr. Softy. I'll tell you that much. Wow.
Fortinet trying to turn. Let's see what the Dow looks like. Dow. Disney up off the low. Still trending. This is still trending lower. So, I mean, I would love to see a base, but it's still pretty weak. Disney, CRM, Microsoft. The New York Fangs are mixed at the moment. I'm just giving the markets time to settle down. All right. New York Fangs are mixed. Again, the stocks that are moving, Home Depot, Merck following through. Merck looks pretty good. Merck, decent looking follow through. All right, Merck, watching Merck here. Merck looks pretty good, coming off the low. A week ago, hit the 50-day moving average, continues to rally. Bollinger Bands are starting to open up. Maybe we get a continuation. Merck looks good. Okay, Halliburton. Okay, at highs. ExxonMobil making new all-time highs. ExxonMobil, Chevron. All right, these continue to show strength. Okay, futures are fading at the moment. Futures are fading. Okay, S&P is fading as well. Okay, S&P is fading. Let's see what hedge flows look like. Hedge flows. Okay, 0 day. Okay, we're starting to build a little positive gamma down below. Maybe that's going to be support today at 63.80, 63.85, something like that. Down to 63.75. Oh boy. Okay. Peloton. Okay, last week we had a theme going. Looked like we were going to follow through. Campbell's Soup. Okay, we got a doji today. Campbell's Soup. A bit of buying down here Thursday, Friday last week. Campbell's Soup. Let's see what some of these stocks that we're looking for rallies out of. Oracle still basing. Micron. Micron looking weak. Okay, AMD. chips, semiconductors. These are pulling back. NVIDIA, pulling back some more. NVIDIA is trading 20 times earnings. What is it? Last year was like 40 times earnings. So I'd be looking for NVIDIA to catch a bid at some point, build a base maybe, show institutions picking up shares. I'm not doing anything at the moment. Need to see the 10-year yield back off quite a bit. Okay, just looking at what's moving. ARM Holdings. ARM Holdings got sold a little bit more. 200 days right below. Bitcoin getting sold. Looks like the markets, it looks like people are just taking the opportunity to take some profits off. Shorts covering or just reduce exposure. I don't see any follow through just yet. Okay. Trace, a little dip there. I'll give it a few more minutes. Need to see what happens after 10 o'clock. I'm your host, Cuzzavetti, coming to you from theclosingprint.com. It is Monday, March 30th. We got one more trading day. Tomorrow we got the JP Morgan collar roll. That'll be discussed quite a bit, probably today and tomorrow. 64.75 strike. Merck. Okay, S&P. Looks like people took profits. Are we going to fade this? It seems to be the story. Any pops get faded. Energy stocks, most of them are so extended, it's hard to really jump into anything at this level. Halliburton at highs, Baker Hughes, BKR. Okay, that's consolidating, basing right where we are right now at the 9 EMA. ExxonMobil, all of these big oil companies. Big oil is up. Chevron, ConocoPhillips. Yeah, these are up. Devon Energy. Diamondback, I took it off the watch list from last week. Let's see what it's doing today. All right, so it's back into the top of the range. It's still trending. I thought maybe it might pull back to the 90, may give a better opportunity. Not the case. ExxonMobil, though, looks really strong. Okay, Broadcom. All right, so New York Fangs are all fading the high, so this doesn't look good. We got a brief pop, overnight pop futures. We're fading that right now. Hedge flows, not looking good. We need to see a bid, tick cumulative. All right, so it may happen later in the day, but tick cumulative rising. Let's go see what's actually moving the markets here. Let's see. Okay, so markets look good. Okay, let me check the number of stocks trading, advancing rather. Okay, so we got 353 stocks advancing, 350 stocks advancing, 73 on the Qs, 350 on the S&P 500, over 1,090 on the IWM. We can see pretty decent green across the board. Okay, Baker Hughes, JP Morgan. All right, all the banks. Let's check the banks out. Banks look pretty good. Banks look pretty good. What's JP Morgan doing? What's going on here? All right. S&P continues to fade. All right, seems like the theme today is fade. Fade the pop. Okay, Swarmer starting to move. Swarmer, if you're trading that, Swarmer, SWMR, Swarmer. Looking for a bounce. I'm looking for this to catch a bid over the next several months. Just the concept of being able to control hundreds of swarms of drones. Seems like that's the direction we're going. Drone warfare. Okay, what's going on here? ARM holdings still drifting lower. ARM holdings getting sold. Palantir, ARM, CoreWeave. Yeah, everything's getting sold. I don't see much. Micron is down. Wow, Micron's down huge. Wow. Micron down what, 3%? 4%? Micron's going in the wrong direction. I took those puts off too soon. Okay, so the theme we were looking at was energy. Okay, so something's clearly not working with stock charts. Can't find JP Morgan. Okay. Really? Goldman Sachs. Wells Fargo. Okay, we're looking for really stock charts is having some difficulties today. Okay, let me do it a different way. Let me go through my chart library. Let's see, banks. See which of these are doing well. Okay, clearly having a problem with stock charts this morning. Let's see, JP Morgan. Yeah, inside day, nothing really spectacular here. I don't know. Man, this is a pretty quick drop first thing this morning. Didn't waste any time. What's the 10-year deal? 10-year doing US 10-year. Okay, it's still fading. Ten-year yield. Okay. Well, sit tight because it doesn't look like we got much of a rally out of this. We got a fade, hedge flows, number of stocks advancing. We got a lot of green. Huh. Well, most of these already have been down quite a bit. Merck is up this morning, so let's see what healthcare looks like. Lilly doesn't look that great, right? Lilly. I was thinking about this for the watch list. Not Lilly, but just in general. What are the pharmaceuticals doing? J&J moving up a bit. Okay, financials, healthcare. Okay, healthcare, dark green. The darker the green, the harsher the rally. Okay, Biogen, Regeneron, Bristol Myers, AbbVie, those look good. Okay. ExxonMobil energy is obviously in play. Pockets of energy. Meta with the bounce. Meta needs a lot of work. I wouldn't be in a big hurry to do anything. That's the bottom line. I wouldn't be in a big hurry. Let's see if we can muster anything out of this gap up this morning. S&P 500 equal weight. Let's see if there's any change here. It should. We got stocks advancing. This is similar to April over here. We had, several times where we come back and retest the green zone. CCI is rising. Number of stocks above the 50-day looks good. Really need to give a little bit more time to this to see if we can rally back above the 200-day on the equal weight. Let's see what the New York Stock Exchange looks like. I would think that this is bouncing. Okay, not much. It already faded this morning's bounce. It's at the 200-day. I'm concerned that if we lose the 200-day on the New York Stock Exchange, that would be a harbinger of weakness to persist, of worse things to come. Okay, let's see what IWM is doing. IWM, that's the first time I've seen IWM with over 1,000 candidates higher, and yet it's not moving. That's weird. Okay, looking at number of stocks advancing, IWM, it was 1,050. Now it's 966, 330, 340 on the S&P 500 advancing. The majority are advancing. Okay, so we looked at, let's look at these security stocks. Palo Alto bounced. CrowdStrike with the bounce. Zscaler with the bounce. CIBR. You could trade the ETF. This just doesn't look like something I want to put money into at the moment. I mean, normally I would look at a double bottom, if the markets were trending, but we're trending in the wrong direction. For now, equal weight. Let's take a look at XII, ARC Institutional Index. See what institutions are doing. They're not buying. Institutions don't seem to be buying. Okay, these 75 stocks we need to keep an eye on. Even though we've got energy stocks in here like Chevron, Exxon rallying, the majority of these stocks are moving lower. Let's see what Coca-Cola looks like. Coca-Cola, defensive, looks a little better. Coca-Cola, PepsiCo. Okay, Coke, PepsiCo, these are being bought. Coke. Caveat. Thank you, Mondo.
Existential risk at play. Existential risk, kind of like Adobe. These are companies that others really have a better model. And anyway, for Matt tonight, I'm really proud to have Rene Haas because his arm making his own chips was brilliant. Stock is down. He had an opportunity to buy it. Rene is very good.
You know what it reminds me of? That story, Claude. You know what it reminds me of? Remember that movie with Sandra Bullock? What was it? The Net? I think it was The Net, right? N-E-T, The Net. Where, she discovers some code and this company is giving multinationals false security, and they're actually the net. That's what Claude reminds me of right now. And AI, that's always been an issue with me. How do criminals are figuring out a way to use AI to rob people basically. And it's just a matter of time. I mean, and when they see this kind of stuff, these kind of notes, and that Anthropic is testing a powerful new AI model, raising concerns about the ability to facilitate advanced cyber attacks. Not only individuals and multinational companies, but countries. Anyway, the futures continue to fade here. Okay, we got futures down, yields down. Let's see what junk bonds are doing. Junk bonds. Okay, everything seems to be off right now. Whenever it gets like this, when nothing is making sense, you have a certain money flow. When the obvious things are not giving you the right signals like you should expect, when like the 10-year is dropping off, or we got to find out where this money's flowing. TNX. All right, TNX gapping down, the 10-year gapping down. We know that energy is pretty safe. It's just you don't want to buy something like ExxonMobil at the high of the day. ExxonMobil was a setup from about 3 weeks ago. The squeeze, when it started to take the high road here about 3 weeks ago, that was a good entry. Chevron, that was, of course, back in January. That doesn't help you right now. But the point I'm trying to make is not a good place to be buying right here. Crude oil. There was a big short that was posted by Russell last night. You just go to Sunday, just scroll back to Sunday. Russell had posted something about a big short on crude oil. Okay. Bitcoin, that also came back. Bitcoin, we thought Bitcoin might actually do something today. Bitcoin, nope. Okay, what the hell is going on with freaking stock charts? Okay. Okay, advanced decline percent. Palo Alto, CrowdStrike, Trade Desk, TTD. We finally getting a bounce out of TTD. Okay, double bottom on TTD. Futures. Okay, we're gonna be going red here if we keep this up. We're up 50 handles now. We're almost 11 handles. We're trying to bounce here. Okay, let's see what hedge flows look like. Hedge flows turning up. Anyway, so there's a method to the madness here. Money's got to flow somewhere, right? We were looking at consumer staples last week. I think Nick Toronto, you were looking at consumer staples. I was looking at consumer staples. A number of you bouncing in this area. Consumer staples, utilities, XLU, energy. Okay, energy, XLE, obviously working. Hard to go after this right now. Halliburton did. All right, Halliburton's starting to catch a bid. So people were taking profits here. Okay, people took profits at the gap up. Now we're starting to buy again. All right, that looks better. Okay, Peloton. What's going on with Peloton? I see that just popped up on my screen. Peloton fading. Okay, Peloton, a little fade from the open. Apple had a nice little pre-market session and then just dropped off. What is going on?
All of that is true, but you know, there was evidence, first of all, that the Fed's inflation target was higher. I mean,
The stock charts is clearly having issues.
going into this.
Apple, yes, nice bounce, a nice pop this morning, faded. Let's see if it can follow through. S&P 500 trying to turn up. Junk bonds. We seriously need some help from the bond market. The bond market not doing what you would typically expect bonds to do. TLT coming off the low. Yields popped last week. That affected all of the tech stocks, compressing their earnings. It seems like traders are increasingly worried that $115 or above $100 Brent crude prices will trigger a global economic slowdown rather than just inflation at this point. So there's that. I keep thinking that if we get any kind of bounce, I want to take some precautions. Let's see. I would really like to buy some inverse funds just to soften the downside impact on my longer term portfolio. I want to buy some of these, but I don't want to buy them up here. I'm hoping that we can bounce a bit. The S&P futures are starting to bounce right now. I haven't done anything, and I'm looking for opportunities this morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, March the 30th. There are stocks advancing. Junk is starting to bounce. Okay, let's see what the dollar is doing. US dollar. Okay, US dollar is rallying. UUP might be an opportunity. Dollar strong. DXY. UUP. Is it UUP? UUP.
So you're more concerned about weaker growth and higher unemployment than inflation, clearly, and it feels like that's a reverse of most of the other folks at the Fed. Fair?
Well, I mean, I can't speak for the others. I can only
US dollar is strong.
But that was Powell's message at the last meeting. Really.
Okay, you would think that would have an impact on commodities. We want to see commodities come back down, but crude oil having a very leveraged weight on the DBC, the Deutsche Bank Commodity Index Tracking Fund. This needs to pull back. That hasn't happened yet. What else, Vinny? What else? Let me just take a look here. Let's see what the cycles tell us. Cycles. And you know what? Let me just check one other thing. Let me check here. Okay, biotech's getting a bounce. Biotechs have been off for several weeks. Biotechs, weekly, inside week, daily, inside day. Yeah, nothing to look at here. It is up, though, from Friday's low. Okay. Real estate weekly, inside week, bounce. The feeling I get is that, for the longer term portfolio, I want to see more price action before I act. I wanted to do something to start the week. I told you last week I was looking to do something with TRBCX, which had rallied over 176% from the original entry in 2022. Doesn't help you right this minute, but what I am looking for is, okay, the trend line that goes back to 22. Reason trend lines work is because a lot of people use them. Nothing mysterious here. All right, so 17%, almost at this trend line now, this potential buy zone. I'm going to just pull this down a little bit. Okay, potential buy. Getting close, you would think. Cycles, you can see the cycles are still bearish. Nothing to do here until that starts to turn. Don't need to be a hero, be early on these. 17%, wow. Okay, S&P is trying to bounce. A lot of stocks are advancing. A lot of stocks advancing. Okay, all sectors are green. That's deceiving because most of these are inside day candles. Energy is a doji at highs. This just feels like it's starting to get extended. I felt like that for the last couple of weeks, but how much higher can crude oil go? Utilities getting a bid. That's fixed income. They went after fixed income. They went after the utility group. Okay, that's looking a little better. Utilities. Okay, that's following through. It's not extended from the perspective of where did it bounce recently, the 50-day. Okay, so that's up 3%, 3%, 4% from the bounce. Could get, let's see, can we get one? That's only 2.5%, 3% potential upside on the individual utilities. Let's see. American Electric Power, that was active last week. That's following through. American Electric Power. Okay, AWK, American Waterworks, that's following through. Okay, so let's go take a look at utilities. Utilities seem to be working okay. Utilities. All right, let's see what we got here. AEE, Ameren, Rally, American Electric Power, Rally, CMS Energy, Rally. Okay, it's a common theme here. CenterPoint Energy, Rally, Con Edison, DTE. Where's DTE? Are they in Baltimore in that area? That's CEG. That's CEG, right? Dominion Energy, that's the southeast. Dominion, or no, it's Duke Energy. Duke Energy. Dominion. Okay, all the utility stocks. Check out your favorite utility. They pay nice dividends. Okay, so speaking of dividends, I'm going to come back to this in 1 second. Let's look at SPHD. Okay, that's rallying SCHD, these dividend paying ETFs. SCHD. We're looking for places to start putting money to work. Okay, that's holding the 50-day. Okay, so utilities definitely working. All right, utilities, Duke, Edison, Entergy, that was up last week on Friday. Exelon, okay, all of these utility companies. First Energy, fairly inexpensive energy name, doesn't move that much, about $1 a day, ATR. NRG, this is one that Tepper from time to time likes to buy. Nextra Energy, okay, that looks okay. NiSource, Eversource, Oak, PG&E. I was just reading the other day that PG&E, they were, I don't know, they had like something negative about it. I forget what the comments were. They were caught in fraud or something like that, and yet Gavin Newsom accepted $200,000 in campaign contributions. They were attacking him over that. Just find that interesting. Politicians, what they get away with. Pinnacle West, neither here nor there. We're covering the utility group. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Monday, just a little bit, 43 minutes into the trading day. Not seeing much to do. The futures did bounce. What I'm seeing is utilities catching a bid. These look pretty good. Utilities, okay, Sempra Energy. Okay, so stock charts is having issues here. What the hell's going on? Okay, maybe it wants me to log in. Okay, let me log in. Ah, okay, please. They're having technical difficulties, huh? Okay. Utilities, healthcare. All right, utilities look the strongest right now. Utilities. Okay, let me go back to what I was doing here. XLE, I just want to take a snapshot of this. Let's see, utilities. Let me go to Candle Glance. Okay, money seems to be working here pretty well. Okay, so we're only 45 minutes into the trading day, and not much to say for the markets right now. We are trying to bounce, trying to hold on to these gains. We're up over 50 handles. We're up 13 right now. It looks like a bear flag.
Did you guys talk about this issue at the last Fed meeting, the private credit issue?
It's something that a number of people have talked about for a while. My sense is that it's not right now at a level where that is something that would make you change my views.
Okay, we're getting a little bounce out of NVIDIA. 20 times earnings. I want to do something with NVIDIA. I don't think I have a position, actually. Let me take a look here. NVIDIA. NVIDIA. No, I don't have a position in NVIDIA. Just waiting on NVIDIA to show some signs. I mean, that company's not going away. Microsoft starting to see a bounce. Microsoft, ugly chart. Got stopped out of this, like Tuesday or Wednesday last week. This just keeps going. We talk about how Microsoft most likely is going to be just fine. But in the short term, what really clocked this tech stocks was that the yields being up there near 4.5%. Now we're backing off today, which is good. We need to see this drop even more. So what I'm trying to get at is that there's no hurry to jump in. If you're day trading, it's a different story. Focus on what is actually moving. If you're an investor, you're being patient, like I'm being patient right now. Some stocks are bouncing, but look at all of these are trending lower. You get a little bit of a bounce, You know what it looks like? It looks like, aside from energy, what it looks like is just shorts covering. That's all it looks like. I mean, imagine being short this from 400. Okay. So 45 points, 40 to 45 points short. Now, what are you doing? You got yields pulling back. So what are you thinking as a short? You're thinking, okay, let me not be let me not be greedy. Let me take profits. That's what it looks like to me. I think if you're too early, you may get some regret here. So, Vinny, what are you looking for? I'm looking for bases. This was a base here. It looked like Microsoft was going to do well. You know, looked like it was going to break above 420. We said we needed to get above 420, 422. The reverse happened. Yield started moving higher. Russell was talking about that a couple of weeks ago. Yield started moving higher. That impacts these big tech names. Future earnings don't look as good when yields are moving higher. You got stock market down, bonds down. That's never a good combination. They usually work in the opposite direction. So we keep keeping our eyes peeled on what's moving. Let's look at small caps. All right, aluminum. Okay, that's interesting. Callow, that's aluminum too. Aluminum materials. Let's see what materials look like. Metals and mining. It's okay. XLB. It's looking all right. Recovering. But what I'm seeing is utilities. Utilities for the last 5 days or so. Defensive. And back to S&P. Back to S&P. All right. So you know what it looks like it's going to happen today? You guessed it. Looks like a doji day. We've got hedge flows are just going sideways in a sine wave, horizontal sine wave. Whenever we start to see this, there's no trend. So I would consider selling premium outside of the bounds of these positive gamma strikes, like above 64.80 or so. I don't know that I would do anything on the downside. That just, I don't know. It just seems much more risky. I've had a couple of these put credits that didn't work out. Like ARM Holdings, I had put credits that pull back. It's still pulling back. ARM Holdings, I think it is, right? It just bounced. Okay, ARM Holdings. So I think it was Thursday or Friday. Okay, I went ahead and took this off. I didn't add to this what I have calls right now, call spreads. Looking for this to move higher. That instead reversed on Thursday and pulled back. So I'm a little underwater on those call spreads, but this number will be less than what it is currently once I get my profits from the calls. Need to find a way to do one of these spreadsheets in Google that can let me do the credit spread, profits or losses, plus or minus any calls that I add to it. Because a lot of times, if the stock is starting to work against me, like for puts, I'll start to buy puts. If it starts to rally against me in the opposite direction, I'll take I'll take profits here and maybe buy calls. Bottom line is I need to get this spreadsheet to work a little bit better. Anyway, so that's not working. And I'm afraid to do any more put credits at the moment. Microsoft was another example. Microsoft up here. Micron as well. Micron. Where was Microsoft? Oh, yeah, Microsoft was here. Even taking puts, Microsoft was a loss. Overall, puts and calls and iron condors, put call credits work fine, but the markets are not very friendly right now. So we've got high volatility. So that's good. That's good for premium if you want to sell. long as it works in your favor. If it works against, it can work against you if the markets pull back like they did last week. I realize I'm rambling a little bit right now. I'm just thinking out loud. I probably could just shut up and do my research here quietly. Okay, so I ran some scans. That was okay. Bollinger Band scan. Let's see what these look like. Candle glance. All right. KRP. That's one. That's a cheap one. Doesn't move much. The SOXS, the semiconductor short, is working. Now, here's the other thing. If you think semiconductors are going to continue to sell off, you can, and you want to hold on to some of your positions for whatever reason. One way to soften the impact is to buy into one of these inverse funds. That way, let's say you have NVIDIA, Micron, and I don't know, On Semiconductor, and those are all down right now. You want to reduce your exposure, but still, you want to reduce the impact, but still be in it in case there's any big move. You could try one of these inverse funds. So I've been thinking about this rather than going the put route because volatility is very elevated with VIX at highs. VIX has been persistent. None of these quick reversals like we've had in the past back in October and November. Those were quick reversals. This one is very persistent, just keeps trending higher. The Iran conflict is still playing on people's minds. Good thing is that we don't have the 10-year yield continuing to go scorched earth, right? So this is looking okay. Let's see. Once again, we want to check breadth. Still looking okay. Still looking okay. And the number of stocks advancing, appreciating a little bit more, 345 stocks advancing. Okay, IWM is back to 1,000 advancing, and the Qs are 68%. 68 out of 100 are rising. Futures, I don't know. S&P just looks like a bear flag to me. I'm reluctant to do anything with the S&P. This looks like it could roll over very easily, come down and test Friday's low. If you're going to do any kind of hedges with actual options, I would consider put flies. Okay, makes it cheaper and still be able to have some hedge. Okay, Microsoft looking like might move. So put flies will help out. They're less expensive. Okay, so Microsoft looks okay for now. Let's see if Microsoft can manage any kind of a rally here. Software has been off. A lot of talk about IGV. IGV, the ETF. Let me take a look at that. IGV. Should look pretty much like Microsoft. Yeah, it does. Okay. So, all right. So this could be the beginning of something. IGV software. We attempted a rally. If you know anything about patterns, obviously, there's a couple of things going on here. You got a W shape. Okay. What time is it? 10:30. I got to take a couple minute break. You got a W shape. Okay. So the bears are still in control. How do I know when the bulls are in control? You'll know when the bulls are in control when it takes out the top of this W, the middle of the W. Okay, so this has to rally all the way back there and go right through the 50 days. So you got the 21 day, the 9 EMA, the 50 day, and that pivot, and all of this volume right over here on the left to deal with. So the bottom line here is IGV double bottom, but I need to see a little bit more follow through. So a little premature to jump in right now. If you're going to jump in, you think IGV has a chance to get back to the 9, 21, 50 day. See that? You got the 9 EMA, the 21 day, the 50 day, that pivot. if you think you're going to see some upside here in IGV, I would scale in. So if you're going to do 1,000 shares, do 100 shares. That's typically the way I would do this. And I would like to see the markets rally because the markets are not doing anything right now. So it's looks like purely defensive positioning right now. Purely defensive. XLU. Okay. Okay, I got to take a 2-minute break. I'll be right back.
I know that you said that it's a really complicated time, obviously, to be investing, and we've seen the 640 portfolio has been a bit of a tricky one, particularly this month. I was looking at the flow of funds last week as well, particularly when you look at the long end, the biggest ever outflow for bonds since March 2020. I'm just wondering, exactly what you're saying to clients right now about the situation, given, of course, you have the Fed, which is got its hands tied because of a dual mandate versus some other more hawkish sounding central banks around the world, like the BOE and the ECB at the moment, which is an area where you continue to see those high yields on the long end. Japan, what was it, the JGB 10-year overnight? Like
MSTZ.
the highest since, 30 years almost?
SMMT.
Yeah, it's a challenge for investors. When you hold fixed income investments, especially high quality fixed income investments like U.S. Treasuries or even government bonds from other developed market countries, you're usually looking for stability, and we haven't really seen that with the increase in yields, not just in the U.S. but pretty much across the globe. That's pulled the values of most government bond yields lower. But it's important to point out that when you hold bonds, prices are going to fluctuate, but most of the income you get from
Utilities. Okay, Microsoft's still trying to push. The problem with trading, problem with trading Microsoft is this might be short-lived. So it needs to. Come on, stock charts. What's going on here? They're having technical difficulties. Microsoft. The problem with Microsoft is that it's just short covering. That's what it appears to be right now. Short covering. Some decent amount of volume. Microsoft's doing okay. Microsoft coming off the low. Okay, Netflix, no follow through. Analysts are trying to get some of these stocks off the low so they can exit more or whatever they're going to do. CrowdStrike with an upgrade. Futures are just grinding a bit more. There goes Microsoft. Microsoft moving a bit.
Our investing webcast series breaks down different investing styles, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live
or on demand. Head over to schwab.com/coaching and start learning today.
CORD.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move.
Oh boy. If you're just joining us, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's Monday. It's gorgeous outside. When you step away from your screen, when you detach yourself from the markets, your perspective becomes more clear, in my opinion. With the emotional part of the markets, there goes Microsoft. Microsoft on the move. Microsoft going. Thank you, David. Chevron, Microsoft. Are we finally going to get a bid in Microsoft?
They've got a new $450 price target as well. Right now, even with that 4+% move to the upside, CrowdStrike trading at 385 and some change. So more than 20%.
Bitcoin. Okay, that looked promising this morning, Bitcoin, and it just kind of sold off.
Mythos model release, which is expected at some point in April, quote, has the potential to ignite a machine speed cyber war, the likes of which we have never seen. They then go on to say that this will act as a potential catalyst for accelerated security spending. And then they say this, quote, we don't think anyone hears war is coming and chooses to spend less on guns and ammo. The analysts argue that the base case has minimal negative impact on security spending over the next 12 months, with upside potential if enterprises rush to bolster defenses to get ahead of Anthropic's new Mythos model. Now, this release could drive more vendor consolidation. They say it has tailwinds for CrowdStrike, leading to the company's annual recurring revenue accelerating.
Oh, yes, the bad side of AI. Eventually, we'll see that. What's Swarmer doing? Swarmer, that was up earlier. Swarmer.
2 percentage points ahead of their guidance, which was 23.6% year over year. New net ARR growth at forecast at 32% for fiscal year 27 versus their guidance of 22.5%, followed by 12% in fiscal year 28 and 10% in fiscal year 29. Now, the upgrade comes, as you were highlighting some of the action we've seen in CrowdStrike, after shares fell 6% following the leak late last week of Anthropic's new Mythos model, which reportedly carries a significantly stronger cybersecurity capabilities than its prior releases, but now seeing a potential spending upside thanks to this research and their new model. CrowdStrike down about almost 18% year to date, but it is outperforming the IGB overall. So has been caught up in this software.
Microsoft.
But not quite as significantly as some of the other names, certainly helped by the 4+% move to the upside today, Sam.
Yes.
Peloton.
Most of these cybersecurity names today, in fact, some pretty considerable moves here. Hey, Molly, thanks so much for getting us across the details of what Wolf is saying. Let's take a closer look at CrowdStrike now with Scott Bauer, CEO of Prosper Trading Academies. What sort of technical levels are you watching?
Okay, all of the security names are up today. Palo Alto, Zscaler, CrowdStrike. Trade Desk. What's Trade Desk doing? Trade Desk. TTD. Trade Desk. All right, Trade Desk on the move.
Last November, around 560-ish or so. This has consistently made lower lows and lower highs. So this rally right now in this environment, I believe it is a sell the rip. I really do. As much as I love CrowdStrike. Now, the next really important level for me that this stock has to get to on the upside.
Against an attack like that, I think as Aurora said in his post, that AI for the industry to be able to work with these partners to ensure something like that.
Okay, Swarmer, trying to turn here. Swarmer went IPO a couple of weeks ago. Swarmer looks like it might want to go at some point. Swarmer. Great idea. Okay, here is Swarmer. We talked about the 60-minute 20 EMA. Swarmer eventually looks like this is going to continue to roll back up. IPO highs. IPO highs. What were the IPO highs? 65. 65.
Spain's defense minister confirmed the country has closed its airspace to U.S. planes involved in attacks on Iran since the first days of the conflict. The move forces military planes to bypass the NATO member en route to targets, but does not include emergency situations. President Trump previously threatened to end trade with Spain after it denied use of military bases in the initial strikes on Iran. And Bank of America agreed to pay victims of late sex offender Jeffrey Epstein more than $70 million to settle a class action lawsuit alleging the bank facilitated his sex trafficking operation. Bank of America did not admit wrongdoing as part of the deal.
Of course not.
Thank you very much, Viv. But let's get you to Harvard. This is the Fed chair who at the moment is discussing how they handle dissent at the Fed.
Tell me now before we do it. And I just think you don't really know how much you believe in something until you've had somebody literally try to take it apart. So I welcome that at the FOMC and at the Fed generally. And I think it helps us make better decisions. The Fed has had a tradition of governors not dissenting, but that's really not typical of other major central banks where there's more dissenting, or they're different, depends on the central bank. And to me, what matters is a dissent thoughtful? Is it helpful? Does it help? Does it express a point of view? Say, yeah, that's very thoughtful. And that kind of a thing is not bad.
Okay, SMH.
Communications, I think a situation like the president.
Semiconductor is looking really ugly here. The 200 days down here below.
Risk to the labor market would suggest keep rates low, but there's upside risk to inflation, which suggests maybe don't keep rates low. You've got tension between the two objectives. And I think to try to expect unanimity at a time like that, where it's really quite historically challenging, it would almost be misleading to be really confident in which way that should go. In fact, it's been said that
Okay.
confidence is what you feel before you really understand the problem.
Okay. Let's turn to the Fed's balance sheet. In 2008, great financial crisis, there was a massive expansion in the Fed's balance sheet. And then again in 2020, under your leadership, there was a second vast expansion in the Fed's balance sheet to address these two economic and financial crises. The balance sheet has since come down a bit, but it still sits at over $6 trillion. So I'd like to hear your views on how efficacious this vast bond buying program has been, both in the 2008 and then again in the 2020 episode. And also hear your reaction to the critics who say that the Fed has become too big a player in the bond market.
All right, the S&P does not look like it wants to hold here. Looks like it's going to fall off. Be careful.
Do they have a point, or are they wrong?
So I think the place to start with that is the problem that people were struggling with from about 2008 to 2022, let's say, in central banking everywhere in the world is.
Okay, let's look at the watch list again. Apache on the watch list. Again this week up. Apache. Campbell's Soup, CPB, Campbell's Soup. CPB. Okay, following through CPB, Campbell's Soup. CNR, Natural Resources, following through. Chevron, of course, following through. Devon Energy, DVN from the watch list, following through. Goldman Sachs, we're looking for a bounce. And the banks, they're just consolidating. Not much to look at there. INR, Infinity Natural Resources, no follow through yet. Kinder Morgan, KMI. This one looked good. It's just kind of sitting here for a $30 stock. Kinder Morgan, KNP, KNP. What? KRP, KRP, KRP. Kimball Royalty Partners trending, $30 stock, $14 stock following through. Mondelez, Consumer Staples, that's looking okay. Mondelez, MRX also looked pretty good last week. MRX testing the highs, MRX on the watch list. Okay, Netflix looked good last week. Looked like it was going to do something on Thursday. Then they started selling a little bit on Friday. No follow through yet. Netflix announcing that they're raising their rates, subscription rates. Stock hasn't done much since gapping up. For 4 weeks now, we've just been consolidating. Netflix, SQM, Chilean company, chemicals. That's trying to break out. Scorpio Tankers, Maritime Shipping. Looks like that wants to go. What's Zem doing? Zem, not much. That was Ali's favorite. Remember Ali? Target looked really good last week. That's an inside day. Inside day in Target looking for a follow through. What's Costco doing? Costco looking good. All right, Costco outperforming today. Costco. Walmart. Trying to get back about the 50-day. Costco, Walmart, those look good. TJ Maxx. Ross Stores had a gap up last beginning of March. Ross Stores, that's been consolidating at the same level for the last 4 weeks. Costco looks the best. Costco. Valorous, this company is going to be acquired by RIG, R-I-G, Transocean. VG, Venture Global, nothing there, no follow through. Vistra Energy, VIST, Vistra Oil and Gas. Vistra is the other one, right? VRT? No. VST, Vistra Energy, yeah. Okay, that one's not doing as good as Vista Oil and Gas. And ExxonMobil. Okay, that rounds out the watch list. So energy and consumer staples seem to be doing the best. All right, ExxonMobil pulling back in a little bit. People starting to take profits. These are getting a little bit ahead of themselves, it seems like. I don't think the picture is changing. It's just that short term, we're a bit extended. So utilities catching a bid. AEP. Okay, so utilities are working.
Current crisis in the Middle East and the effect on energy prices. Indeed, this classroom is familiar with that question from the last problem set, where we asked, how would you advise the Fed to respond to the rising price of oil? And we teach that when there's a demand shock, it's a pretty natural set of recommendations that emerge for the Fed. But when there's a supply shock, like this energy price shock, there's trade-offs that the Fed has to juggle. How do you make those trade-offs in general, and how do you make those trade-offs in this particular instance? And can you help everyone with their piece?
Well, maybe they should tell me. Sure. So it's you start with what you said. Our tools work on demand. Higher rates will tend to moderate demand. Lower rates will tend to stimulate demand. And when you have a supply shock, our tool doesn't have meaningful shorter-term effects on supply. So when you have a supply shock, the first question is, do you respond to it? And the classic question has been around energy, just in general, not really speaking about the current.
All right, high tech alert.
Energy shocks have tended to come and go pretty quickly. Monetary policy works with long and variable lags, famously. And so by the time...
Okay, there goes Amazon's on the move. Okay, so Amazon's moving here. It's inside day on the daily. Amazon.
So the tendency is to look through any kind of a supply shock, but essential aspect of that is you have to carefully
Hedge flows. Expect that this is going to turn down at this top here. It looks like we're going to have a doji day today. Let's see what up down volume is saying. Up down volume. Okay, it's still decidedly bearish, 1-to-1 down with the NASDAQ composite, the SPY, the Qs, the diamonds, IWM, 2-to-1 down. That's interesting. Interesting in that we've got a lot of stocks up, advancing, 365 stocks advancing. A lot of them are probably defensive, if I were to guess. S&P 500. The top 10 S&P 500 stocks. It's a good mix here. Actually, it's a good mix. Consumer staples, some security stocks like Palo Alto, etc. Trade Desk, advertising, CrowdStrike, security, Workday, human resources, software, Biogen, biotechs. Let's see it with the biotechs again. Biotechs again. Biotechs. BIIB. Okay. I don't know. It just looks like utilities are doing well.
Start with monetary policy. I think there's pretty broad consensus in both political parties on both sides of Capitol Hill. And our oversight, by the way, is Congress, not the administration. But pretty broad agreement that on monetary policy, the Fed needs to be fully political.
Okay, this looked a lot better earlier. We're starting to see some red creeping in here. Even the sectors that were doing well this morning. Financials seem to be doing the best. Kind of creeping up here. Let's see. Marsh McLennan. Aon. Coming off the lows. Erie. These are all coming off the lows. So are they buying the lows? FactSet. Groupon. KKR, Visa. Yeah, all of these are at lows. So even though these are green at the moment, they're coming off the lows. Healthcare have pulled back. J&J.
Should allow the vice chair for supervision to carry out the role that Congress has assigned to that person.
Zotis.
And that's what that is. So you'll see, and the two parties.
Consumer staples, Walmart. We just talked about Costco. Looks good. Costco.
Someone who is working without regard to political and should be therefore a person who can be reappointed by either side. That's always been the case. It's been, Ben Bernanke was reappointed. I was reappointed. And I think it's a good test of the Fed's nonpartisanship that your appeal is really bipartisan. I think that's a critical thing. So if I were to try to impose my personal views on regulation, that really wouldn't work. So I think there's I don't want to say deference, but any chair needs to let the vice chair for supervision take the lead on those issues, and then I'm another voter, is what I am.
So let's talk about Dodd-Frank and the reforms to the financial system. 2008 was a terrible crisis, and there were many efforts made in the years afterwards to tighten the bolts and create a safer financial system, less prone to these kinds of cataclysmic events. But today we look out at the world and we see lots of threats, both inside the formal banking system that you regulate and in the non-bank financial system, which is lightly or not at all regulated. So I wanted to have your thoughts on whether we're in a position of relative safety after all the Dodd-Frank and other reforms following the 2008 financial crisis, or whether the new threats actually have brought us to another period of and just to illustrate with a couple examples, inside the banking system, there's commercial real estate that has fallen in value. That affects both the banking system and non-banking financial institutions. We have the private credit market and a very active debate about its health. We have concerns about cybersecurity in the age of AI. Do you worry that another financial crisis looms out there? Of course, there's always a possibility, but is it something that's a issue of high alert, or do you feel that we're putting all the pieces in the right places?
After the global financial crisis, we actually started a new division of financial stability, and their job is to be, sort of the watchers of all financial stability issues all the time. So we're not, the old system was the crisis arrives, we get the team together, and we battle the crisis. This is much more of an ongoing monitoring.
All right. So I'm just sitting here watching utilities, real estate. I just don't feel it. I don't feel it. I don't feel the markets. They feel like a trap. Only because everything that I watch, I have 25 different indicators, and I'm seeing green here, but yet other things are not working. Like New York Stock Exchange, you would expect to see this at the top of its candle, not, in the lower half. Stochastics turn back down. Junk bonds not doing anything. US dollar. Okay, US dollar looks good. Microsoft coming off the low. Microsoft. Okay, Microsoft turning the corner. I would do something with Microsoft. It's just I'm concerned about this 10-year yield, because if this turns back up or bounces, doesn't follow through to the downside, that'd be more pain for tech stock holders. Like semiconductors right now looks terrible right now. Semiconductors, SMH. If you're holding any semiconductors like Micron, they're not looking very good. Micron. They sold earnings. Earnings were good. We were price to perfection, basically. Price to perfection into earnings. And they've just been selling since. So you can see this very large volume by price area overhead. That's going to be hard to get through in the future. A lot of selling volume. That's institutions right there selling in the previous couple of weeks. Microsoft still good. Microsoft looks really good. Microsoft looks good. Microsoft. Nice follow through on Microsoft if you're day trading it.
One of our former people that used to say that we're in the levee building business, not the hurricane prevention business, right? So there are going to be hurricanes, and they're going to come, and you just have to assume you won't know what direction or what the nature of it will be. So you want
Amazon trying to break higher. Amazon's trying to break out. More high techs.
You mentioned private credit. So private credit is something that you guys are probably following. It's a relatively small part of a very large asset pool. We're watching it super carefully, as everyone is. We're talking to the people in the industry and investors and everything. I think we understand it. We're monitoring it.
Okay, we're turning back up now. S&P is turning back up.
Lead to greater contagion or greater losses or connections to the banking system. And, we're going to do that. You're not going to hear
Netflix turning up. Watch Netflix. Amazon. All right, we're starting to catch a bid here. Looks like shorts covering. Netflix.
What is one of your biggest
Amazon. Microsoft's still going. Snowflake is sneaking around. The alley with Sally. Tesla's trying to do something here. Tesla looked ugly last week, right? Tesla still trending lower.
The windshield and not the rear view mirror. And so I'm tempted to say regrets. I've had a few, but I see you. Then again, not so many, or whatever the line is.
Okay, what? He's just going on and on and on. Powell. I get the feeling they're giving him a forum so they can speak out against, his favorite president. Politics and politicians.
Welcome to Schwab Network, where real-time market coverage strategy. From the opening bell to the closing bell, we've got
Slow day today. Slow day. S&P. Just keep looking at the S&P.
A higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
follow the biggest headlines, live analysis, breaking news, and sharp trade ideas.
Okay, S&P.
Hi, tick alert plus 800.
Okay, so last week I mentioned it. Let me just reiterate what I was talking about. You can see back in April, the action that we had. We had this really deep discount. We were down 21%. We're only down, shy of 10% right now on the S&P. What I'm looking for is, I was thinking that we're going to get a big bearish day today, start the week, and then reverse back up, perhaps, like we did here on this second candle. You got the big bearish candle. The very next candle is a bullish candle. That's when President Trump said it's a great time to buy. We rallied 13% on that week, plus or minus. So what I'm looking for right now, I was hoping that we were going to get a move lower. I was very surprised to see markets up as much as they were overnight into this morning. So this is just so susceptible to a downside shock or an upside pop. Very risky with VIX where it is. Volatility is very high. Watch the futures. Futures starting to turn back up. For those of you day trading, futures. All right, so we just made a new high. Hedge flows. That's indicating that we could see more follow through. ARM Holdings bouncing back up.
Happy Monday. We're 90 minutes into the trading day, and welcome to Trading 360. I'm Marley Caden, coming to you live from our
Oh, he's still on. Okay, they're going to blow V8 a little bit. So I got my first speeding ticket. And I think I've only had one before. Speeding ticket, $180. Anyway, my fault. S&P continues to look pretty good here. All right, S&P 500. S&P. We're back above VWAP. Up-down volume suggests that this is going to be a doji day, so I wouldn't be chasing this. If you're already in this, look for resistance at this high over here. Nick is already in. He's looking for a double on his options, his call options. So that's good. I was watching that one, Nick. That looks good.
Extreme high tick alert.
Crude oil over $100 a barrel. We're up almost 2.5% at 102.03. And Bitcoin trading higher, but still below that 70,000 range. We're up 2.7%, but we are at 68,010 this morning.
I do want to welcome in Alex Coffey, though, our senior equities contributor here on the network, to take a closer look at a name that's on the move today. We're talking about CrowdStrike. Cybersecurity has been a sector we've been watching carefully. A lot of volatile moves in the space, but some positive news for CrowdStrike this morning.
Yeah, nice move in CrowdStrike, up almost 5% before I came over here. I had looked since. Josh Chilton,
Netflix turning back up. All right, Netflix looking better. Netflix Netflix looking good.
Price target is around 490, and now we are up over 5%. You can see that slow build here intraday.
Okay, there goes Amazon.
Market rally, you're seeing, I know Jerome Powell's
Amazon, Microsoft, Netflix, Extreme High Tech.
I thought kind of an interesting way of thinking about markets.
Shorts covering.
Josh over there says Anthropic's upcoming model release is going to, quote, have the potential to ignite a machine speed cyber war, the likes of which we have never seen.
Oh, they're just not going to let. They have nothing better to talk about, so they're going to be talking about this. Claude. Cyber wars.
So starting with a thesis of what might happen and then looking for where that could benefit things. So I like that thought process, and ultimately we'll see if he's right about that Anthropic release. 71% of analysts in the buy camp for CrowdStrike.
Okay, nice little rally there. Extremes happen in both directions. I know I'm not telling you something you don't already know, but you know we had extremes last week. Looked like we were never going to stop. Okay, so now we got an inside week so far. This is a weekly chart, S&P. Okay, inside day. Okay, we're down just shy of 10% last week, just shy of 10% from the all-time high. Correction territory, as they like to say. Okay, more high ticks.
We first saw really negative reactions. CrowdStrike fall about 6% on the news that there was going to be a new Claude, this Claude Mythos, I think is what they're calling it. Whether or not they'll change that name now that it's out, I don't know. But I'm just fascinated by the sort of erratic moves that we're seeing. First, it's a big downside move, but now it's a net positive.
Yeah, I think this is the kind of the reactions of markets typically, which is right now we have this kind of revolutionary.
Okay, I got to take a 2-minute break. I'll be right back.
Extreme high ticker.
You have the time to dig into things and think about it and realize, and depending on who the analyst is or the investor, they come to different conclusions, but that it's not going to be a one-size-fits-all reaction. And so what may be negative for software in the eyes of Josh over at Wolf Research might actually still be positive for CrowdStrike, create opportunity there, even though I don't think you would say that, hey, this is going to be good for all software stocks that AI keeps getting better.
No, certainly not. But seeing a nice boost in the cyber names today, and Alex, thanks for taking a closer look at CrowdStrike for us and also for that comparison as well. Alex Coffey, co-host of Next Gen Investing. Appreciate it as always. I do want to welcome in our next guest, though. Take a broader look at the markets as we have a very different setup today as we had last week. Joining us now, Jay Mehta, the co-founder and chief executive at Faraz Investors. Jay, great to have you on the program. You know, very different start to the week than how we finished last week. At the top of the show, I was going through, we've got equities higher, looking at a significantly higher dollar. We've got oil higher as well, but we're seeing yields fall. What are some of your takeaways of this action we're seeing?
Well, I think, it's just kind of a comment on the uncertainty that we're seeing in the market overall, mostly driven by the geopolitical risk that Iran has caused. One of the biggest focuses that we have, especially with our clients, is really just focusing on the long-term planning instead of the headlines. With as you said, quite a different performance today than we saw on Friday. Friday we saw the S&P closing at a 7-month low with 5 weeks of constant decline, and then we see this turnaround. So it's just the matter of the increased volatility starts to cause concerns, and we really want to focus on that long-term planning issue.
So Jay, how are you managing that right now? Because I was just talking to my last guest about how reactionary the markets are right now, and everything feels so headline driven, and we're seeing these massive sell-offs, and then all of a sudden it's fine now, and we're moving higher. And so how are you balancing that, your desire to focus on the long term while knowing that we are currently in an environment that's extraordinarily reactionary in the short term?
Yeah, I mean, that's a great question. It's something that we're talking about all the time. I think it really goes back to making sure we get to the fundamentals of planning, right? And we don't want to be caught in the whipsaw of the markets going up and down and making reactionary decisions. As you said, we don't want to be headline driven. We want to be process driven. And so a lot of the conversations we're having with our clients is making sure that we start with the plan first and we allow for long-term vision, which allows for short-term volatility. So, when you think about a plan, you understand that the markets aren't always going to be going up and always going to be going down. And these things happen every 5 to 10 years, whether it's COVID or it's Iran or whatever the headline might be. We know something's going to happen. We just don't know how long it's going to be or how sharp the increase or decrease is going to be at any given moment. But going back to the fundamentals and being process driven, I think that really helps kind of ease the tension in the long-term planning.
So Jay, then as you mentioned, we have these events that happen, let's call it 2 times a decade. We're currently in the situation with Iran. So when you're looking at oil and energy and any secondary effects of all of this, whether that be on specific sectors or categories or even inflation itself, you obviously have to take that into consideration.
Yep.
Because there are some
Didn't get any follow through. That's exactly what I thought might happen. This has to be more sustained. It can't just be a high tick alert and then all that tells me is that we're just shorts covering. That's all. Microsoft starting to tail off. Amazon at the high starting to tail off.
Safety and the risk off assets, sectors like energy, defense and aerospace, utilities, these tend to fare well in these kinds of conditions. And these are 3 sectors I'd say to watch out for. I think some other things that are maybe things to be concerned about is that as we think about what's happening in the Strait of Hormuz, a lot of people are talking about
S&P.
gas and natural gas and oil, but there's a secondary concern, and that's the amount of fertilizer that normally flows through the strait. And with that continued constraint, we might start to see a
They're going to talk to this guy all morning? Ugh.
tolerance of our clients and investors at large.
And Jay, you mentioned energy there, and last I looked, I think energy is the only sector that's in positive territory so far since the Iran situation started to unfold here. Does that trade still have
Netflix.
Yeah, I think so. I think that as long as
Netflix still inside of this consolidation pattern. We need to break to the upside out of this base, obviously. We've tried to a couple of times. Thursday, Friday last week. Netflix, Amazon trying to do something as well. Amazon. Okay. Amazon inside day on the daily, you can see. Big bearish day Friday. Bitcoin trying to bounce. Bitcoin. Bitcoin. Trying to get a rally. No rally. That's the 50-day. 50-day.
And so, Jay, if tensions in the Middle East do begin to ease, what is the first signal that you're going to be watching for? What do you think might be the first sign that we're moving back into risk on assets?
Well, I think that you're going to start to see some sell-off in these other sectors, the defense and aerospace. You're going to see it in the energy space, and then even in the utilities. I think utilities will probably be a little bit slower to move off of. But when we start to see those signals, we know that there might be some opportunities to risk on assets, and just kind of watching the moving averages on the major indexes, and then also kind of paying attention a little bit to the VIX. Gives us a little bit of an idea of what's the market sentiment and are we ready to get back into risk on assets.
Well, Jay, fantastic to have you on this show. Thanks so much for taking the time to
Okay.
join us on your Monday morning. Jay Mehta,
RSI trying to turn up inside day.
Trading 360. So stay with us. They've got the big three coming your way next.
Excuse me.
Charts for you. We've got Kevin Green taking us through the technicals and Achilles Larea Jr. taking us through the trades for Raytheon, BP, and Taiwan Semi. That's next on Trading 360 on Schwab Network.
All right, it's 11:13 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 11:13, Monday, March the 30th. Look for stocks that'll bounce and follow through rather than just roll right over after a little short covering. Yeah. Understood. Oh, boy. See, the one thing that concerns me about putting money to work, I told you about TRBCX before, right? TRBCX, it's going to require a pretty big bounce. Same thing with S&P here, the S&P. Okay, TRBCX, we're going to need a significant bounce. We're down just shy of 17%. I do want to get back into this, but I'm being patient because I'd rather be late than early, miss 1 or 2% rather than being in this position and lose another 2 or 3% after making a nice exit up here. I don't want to be premature and jump into this too soon. This could be a very large head and shoulders top. Okay. So what do I mean by that? Well, I don't know if you see this, but it should be pretty obvious. What I don't want to happen is, I mean, we don't know what's going to happen, right? So you got this left shoulder, you got the head part. What if this winds up being the neckline? What if, right? What if this area winds up being the neckline? And this winds up being a big head and shoulders top. That would mean that we're going to pull back even more. So that would be like a 50% pullback. Okay, that'd be like a 50% pullback in Fibonacci's. I don't know what would happen to make this happen, but I think we're going to be fine. It's just, that's why I don't want to jump in too early. Okay, so we got the low, we got the high, and down here would be about a 618, in between 618 and 50% retracement. From the low back in 22, the last bear market. Okay. So if we were to pull back all the way to this area here, and this becomes the neckline of a head and shoulders top, and we bounce again, that'd be a pretty decent discount. So at a minimum, we need to see a reversal like we had back in April. So that's the start. That'll be the start of the observation. Okay, we need to do something like this right here that we did in April, right in here. If we can get that, then we might be out of the woods. Get rid of all this garbage here. Okay. 17%. Okay, S&P. All right, see that? A little bounce on the S&P and it fades. Same thing with Bitcoin. Same thing with Amazon. Look really good there. Probably shorts covering. Intraday, the daily inside day. So the rule with an inside day is that you wait for the next day direction. So today is, being it's a Monday, I'd be selectively patient here. The rule is whatever direction we take out of the doji after an inside day. Okay, so if we get this kind of bounce tomorrow, that's the direction we want. I suspect we could move lower again. Remember the TRBCX, the weekly in April, it made a new low before reversing, and the president the president said this was a good time to buy. I think it'd be a mistake to get too large right now. Volatility is very high, so these moves in opposite directions could be very quick and pretty dramatic. Netflix looks like it wants to continue. Netflix is attempting. It's above VWAP. Netflix is showing some strength. All right, let's go look at Netflix real quick. Let's look at Netflix earnings. We know that Netflix is increasing their subscription rate. Okay, so their earnings growth had backed off. So I guess they're trying to massage this number. Revenue growth is still climbing at a pretty decent clip, double digit. Netflix. Okay, so next quarter, they're expecting 76 cents. That would be a 20 cents improvement. You know where that 20 cents is coming from? Partially from increasing subscriber rates. Okay, so bottom line is this is probably going to get bought eventually. The big gap up, of course, on Netflix was due to them exiting the idea of acquiring Warner Brothers. It always seems kind of contrived to me, because Netflix, I don't know if you're a Netflix subscriber. If you are a Netflix subscriber, you know what I'm talking about. From time to time, they get material or movies like Patriots Day, with Mark Wahlberg. Occasionally, they'll have it for like 2 weeks. So they're paying the movie production studio for the rights for their subscribers to view it for 2 weeks. So that's kind of like a carrot, right? A carrot for anyone that's interested in continuing to subscribe. They have good movies. They have good content. So increasing their subscriber rate makes a lot of sense. The gap up. All right, so prior to the gap up, where was Netflix? Okay, that's one of the things. So prior to them talking about acquiring Warner Brothers Studios, they were up there near 130. So why don't they just, do the thing with Warner Brothers to have some of their content from time to time? The answer is that's probably what they're going to do. Ellison, I don't know how they're going to acquire. They'll figure it out, but I don't know how they're going to acquire Warner Brothers, Skydance, Paramount. Anyway, so Netflix, we're looking for that breakout. I'm looking for that breakout to signal, okay, now it's time to add. I won't do it until we break out. We got to break out above that upper trend line over there. Once we do that, I'll add to my Netflix position. Right now, I'm just sitting on a position. Okay, Microsoft. I would like to get back into Microsoft. Got stopped out on MSFU last week. Couldn't hold the base. Looking for that signs that institutions are picking up shares, not selling. So you can see with Microsoft, they had some buying back here. 3 weeks ago. It couldn't hold the base. Instead, it just rolled over. So we're looking for more of this kind of action that we saw back in March. And we need to get above the 9 and 21 and 50-day moving averages. So until that happens, Microsoft is kind of off limits for me. It's just throwing good money after bad, in my opinion. The thesis for today was energy, not also working, but also utilities. Utilities working like AEP. These are following through. Okay, so this has still got a bid in it. That's telling you all you need to know. So they're still bidding on utility stocks, fixed income investors, fixed income related ETFs, energy related ETFs, XLU, the sector, still maintaining a bid, even though the markets are just sitting here doing nothing. So that's good. Consumer staples, some of the names in consumer staples are working, like Campbell's Soup from last week. Campbell's Soup. All right, this is, you can see the Kirby over here. So if you're a new subscriber and you don't know anything about what I'm talking about, is whenever you see these volume by price bands on the left and they're shorter than these, like right here, you can see that this is definitely showing you where the accumulation occurred and where the base is. So that tells you, put my stop underneath 2050, enter, and see how far we can go with this, because the resistive volume that traded over the last 2.5, 3 months, the resistive volume is overhead. Okay, it's north of 26. So I like to say the ceiling is at 26. You also have the 50-day, you got the 21-day right overhead, the 50-day. So once we get to the 21-day, we'll see if this accelerates a little bit more. It's in the right sector. Molson Coors, that was active on Friday, inside day now. We're looking for that to follow through. You can see the resistive volume here is just overhead at 44, so it's a little closer. Costco, consumer staples, you need food, you need all the items that Costco provides at a discount. If you're a member, you know what they do. Used to be Costco was like very elite thing. Now you see everybody caught on to it. Let me pay a membership price. I get bulk product for good prices. You know, besting Walmart, really. Outdoing Walmart. Also, Costco has much better product. You know, my son was asking me, why do you have BJ's? Why do you have a BJ's membership too? I said, well, you know, it's much less expensive for a veteran. On top of the fact that gas is right there, it's right. I don't have to drive as far. Blah blah blah. So I keep Costco, but BJ's does not have the same quality. Well, I noticed the produce, the meat section, at least where I am, the meat section in particular, butchers. They have a good section in what do you call it? Rotisserie chicken and everything in Costco. Anyway, they have a lot better selection. Their buyers seem to have a better grasp of what will sell. You know, they have some really good buyers at Costco. If you know anything about big companies like Costco, the buyers negotiating deals. What is Vinny talking about? I'm looking at the difference between buying something like Walmart and Costco. I would lean towards Costco. It looks like everybody else is too. Look at the volume. MACD stochastics turning up. So would I buy Costco right here? Absolutely not. What I would be looking for is a dip like we saw right here at 1020. We just got a dip again. Maybe we get a little dip back to below 1,000. If you get that, maybe that's an opportunity to get in. Looks like Costco will follow through. Okay, that looks good. Okay, so I guess you could call this. It's not quite a volume compression pattern. Let me run a scan. Volume compression pattern candidates. Let's see. Volume compression pattern. Let me go over here. Let me look at my scans. And volume compression pattern. Where is it? Volume. I think it's this one. I don't know why I call it this. Ascending tringle. What's an ascending tringle? Could at least spell this right. Ascending triangle. Okay, I think it's this one. I think it is volume pivot. Let me see here. US 500,000 volume. Strong volume gainer. I think that's it. Let me just check. Let me run the scan, see what it pulls up. Okay, I'm looking for stocks with high scooter scores. That tells me relative strength. Commodities select strategy ETF. No. Falcon oil and gas. Okay, that looks good. Starfleet Innotech. Okay, let me try a different one. Let's see. Let me just rename this. Okay, the S&P is just sitting here doing nothing. S&P. Yeah, this is it. This is it right here. Okay, cool. All right, so this is a volume compression pattern. $226 candidates. Interesting. Let's sort these by scooter, USO, crude oil, crude energy, Turn Pharmaceuticals. Turn Pharmaceuticals. Okay, that one looks okay.
And I was fascinated by some of the category breakdowns too. You know, I think of Easter and I think of candy.
Costco's one. Yeah, so it did pick up on Costco. Costco. Let me see. Costco, COST. Let's go to the volume point and figure. Costco. Yeah, so if Costco gets above 1030, that would be all right. We're already seeing green X's here on point and figure, so that's telling you that this push higher most likely will follow through. At least that's the way it appears right now. Point and figure chart. That looks good. Costco. Just don't buy the high of the day. We'll wait for the next dip on Costco. It's starting to dip a little bit right now. So got an opportunity for Costco coming up here.
Spending, much like Prime Event has become very much like a back-to-school shopping moment. We see some of that playing out with some of these spring sales moments that really hone in on Easter, but then also open up into other categories.
Money, you're talking in riddles. I got you though. I agree with you.
Yeah, so we've seen the trading down and shifting down for a couple of years now.
Yeah. It's been a while since we've seen stocks follow through without, popping and then pulling back like this, right? I mean, in late mid to late 2025, we had a nice trend going. So
High tick alert plus 800.
got a high tick alert. I mean, any kind of news could come in and shoot the markets higher here, but we are getting chopped up. Back in 25, mid 25 to 26, we had nice trending positions. So what would happen is we'd come in the morning, prices would start to rise, and we'd make little dips, but then we would quickly find dip buyers and we'd continue to move higher. We haven't had dip buyers in at least 6 weeks, 7 weeks, obviously. So that's what we're waiting for. We're waiting for dip buyers to show their hand. We haven't seen them yet. We haven't seen them. So we get these stocks that'll look like they're going to break out and then they just stall. Look at Microsoft. I mean, if you're looking at the intraday chart, yeah, it looks great. But when you look at the daily, the chances that this rolls over again, pretty high, actually. So I'm reluctant to jump back in. At a minimum, we need to get above the 9 and 21 day, have the 9 and 21 day roll back up, and then eventually get above the 50 day. That's when I'll start adding to Microsoft in a big way.
High tick alert.
Otherwise, it's just day trades. You might be saying, well, Vinny, I joined you because I want to make money every day. Well, if you're not adept at day trading, we are in a negative gamma regime. We have been in a negative gamma regime for 4 to 5 weeks. And until that changes, putting money to work is going to be a hell of a lot more risky. So what I'm trying to achieve is fewer losses while we're waiting for the markets to turn in our favor if you're bullish. If you're bearish, you short these pops. I currently am thinking the same way. S&P, I would love to see the S&P rally a couple of days, have volatility come in a bit, VIX come in a bit, and I'd like to buy some put flies for protection. If we continue to move higher, hey, that's great, because most of my positions are longs anyway. But I'm very, very cautious right now. If I'm going to trade anything, it's going to be the stocks that are showing the most strength. Today, that's been select security stocks like Palo Alto Networks, CrowdStrike, Zscaler, etc. What we've noticed early was utilities continue to follow through. So the utility names like American Electric Power, these stocks are following through. Okay, right now they're selling the high of the day. Okay. Con Edison. Okay, that looks good. Dominion Energy, Duke Energy. Okay, all of these look good. They're very positive and they continue to show strength. I keep thinking every week we come in here, when is energy going to top out short term? I think energy long term is going to be fine because they broke out of a multi-year consolidation. Okay, so the longer the base, the higher in space. That's uniquely energy right now. And you add on top of that the war, crude oil prices. But this is so extended. Eiffel Tower pattern. I would be increasingly leaning towards options trades. We've been trading since January. CVX, the way we traded this, as everyone knows, we were buying call spreads. Okay, so we started off 150, 155 and worked up 5 increments continuing to roll out from January to February to March to April to May to June. With the last trade that I had on this one, 200, 205. This has since gone from 205 up to 215. This just feels like it's getting a bit overdone. Relative strength says it's okay, that the strength persists. If this starts marching lower and prices move higher, then we'll have a bearish divergence. But for now, energy, consumer staples, utilities, that's what we talked about in the weekend video. I'll stick with the guns. I think that's what's going to continue to prosper. We're starting to see materials for the last week giving you another opportunity, giving an additional opportunity. So material stocks, let's go take a look at some of those. You may be in some of these materials, metals and mining. I mean, stocks like Newmont fit the bill. Rio Tinto, Vale. Okay, these are all doing the same thing. Rio. Okay. What is CEG doing? CEG utilities. Okay, that's kind of sitting there. So materials. Let's go take a look at materials because there are some stocks in the materials group that looks good. Okay, we're back to looking more green. All right, so look at all the dark green that we're seeing now. PayPal, look at PayPal. I just got a request from PayPal to take a survey. I see these from time to time. It looks like they're trying to get something going here. PayPal. Okay. Palo Alto, ServiceNow, CrowdStrike, Trade Desk, Blackstone, FICO. Okay, materials. Okay, materials look good. Okay, materials. Okay, so again, Lionel Bessel, that one was very active last week. LYB. Okay, that one continues. You just don't want to buy this at the highs. It's probably going to continue. If you look at the weekly time frame, we looked at that last week as well. Big reversal. Catching this back in January. Okay, nearly a double. Okay. Albemarle up 1%. Albemarle is consolidating. ALB. Albemarle. This looks like a volume compression pattern. Probably just a flat base. Albemarle. Dow Chemical. Many of you talked about Dow last week. Grover commenting that when was the last time you saw Dow Chemical leading the market? That was Friday. We made new all-time highs last week. New highs, I should say. New 52-week highs. All-time highs would be back up here. Looks pretty good, Grover. Still going. Dow, still going. Frano. I think you're in this too, right? Okay, so those look good. What else? Corteva, fertilizers, Sherwin-Williams, paints, Ecolab, Lind, L-I-N-D, Lind, L-I-N, symbol L-I-N. Okay, this looks like a volume compression pattern. Okay, so that's good. Okay, volume compression patterns. These pullbacks become less and less. Let me just check this real quick because visually it looks like it. All right, so the first pullback was 7.5%. The second pullback, pullback, 5.5%. Okay, it looks like a little pullback here. Looks like a volume compression pattern. This is one of Mark Minervini's favorite patterns, and basically it's an ascending triangle. Okay, so we're looking for this ascending triangle to continue this trend. It's consolidated. All right, so this is a pretty decent setup, I would say. Okay, so basically consolidation. It may pull back one more time. Once it breaks out, your trigger is right there. Your trigger is right at 508, 509. Volume compression pattern. Okay, let me just take a picture of this. I want to keep it for my notes. Okay. RSI looks good. Okay, so let's take a look at that. LIN. See what kind of earnings they have. Survey says beat expectations. It's got single-digit earnings growth, single-digit revenue growth. Chemicals, energy, food, beverage. They're a multi industrial conglomerate. Lind. Woking. That's a cool name. Woking, England. Okay, so Lind looks pretty good. Okay, S&P looks like it wants to go. S&P. All right, maybe it gets something going here. You're looking at the diamonds, Russell? Okay, you're looking at 456, 456. 457 was Friday's high, right? Friday's high, 457. Just to reiterate, beat this to death. If we get a multi-day rally, there's two things that are going on in my mind. Number one, do we follow through? If we don't follow through and it looks like we start to see some weakness or more news comes in, I am hopeful that the rally will give me an opportunity to buy hedges at a higher price. I don't want to buy hedges down here, obviously, with volatility pulling back in. But if we can manage to see volatility pull back and prices move back, I don't think we're going to make it through the S&P 500, the 200-day on the first attempt on a reverse move. Okay, I don't think that's going to happen. What I would like to show you, I know I'm jumping around here, but that's the way my brain works. Let's go to the S&P. Okay, and let's go to the 2007-2008 period. Because if yields manage to keep falling, then this will negate my concern here. Okay, 2007, 2008. This is the problem. You get a 12% pullback, you get a nice rally, you get people long here and they get too confident, and we get another reversal and drop back down again. Okay, and if I extend this out to March, obviously March.
This opportunistic pullback might be that an opportunity for those who are looking to re-enter a name which has been benefiting from high demand from servers and data centers.
Yeah, certainly has benefited year to date up about 30%, but that pullback, today just down more than 5.5%.
2009.
With all of that in play here, George, and JP Morgan saying that they still see some potential room to run here, how would you look at structuring an example trade if somebody wanted to get in?
Okay, so you see these over here?
Okay, so looking at the trend,
12%, 11%, and where was that happening? It was happening at the highs. And then we start to roll over. Of course, that was a great financial crisis. I'm not expecting that to happen again.
it's been riding along the 20-week moving average quite nicely. So you could pull back to that
So TNX, the 10-year needs to back off some more. So what Money Magic was talking about is happening here. We're getting chopped up and no follow through, no follow through. Amazon's trying to follow through right now. Okay, so maybe the S&P goes, maybe Amazon. It's got a long way to go to take out Friday's high, and even more to get back above the 921 and 50-day. I don't like the odds on some of these stocks, so I'm not adding to positions or starting new positions, except for short-term swing trades, perhaps. The S&P trying to rally. This is a period too where we had, it looked like you see how we lost the 200-day moving average back here in 2011, 2012. We lost the 200-day, and everybody was confident. You see that hammer right there? People got very confident, and then the next week we came in and wham, we slammed everything down. We managed to pull back just shy of 20%. We rallied a bit. Everybody got confident again, and then rolled over again. What was happening back then, 2011, we had 2011. Let's go see this. 2011, industrial production, 2011. Over here, rolled over, industrial production. See, this is good. This is something that a lot of people don't focus on, but industrial production is improving, continues to rise. It's just getting more expensive to do things because gasoline is so expensive. 10-year needs to drop. Meanwhile, the S&P is trying to do something. So is Amazon. Amazon's trying to go right here. I realize I'm talking out loud, and I'm just like denting my brain as I'm talking, but these are my concerns. We need to see the markets improve. The New York FANG needs to get a move on. You saw what the New York FANG looked like last week. So this is not instilling a whole lot of confidence, I have to tell you. This needs to see a multi-day rally. The S&P needs to get back above the 200-day. There's just so many things that need to happen. Advanced decline is looking okay. Okay. 200 days overhead. All right, so we retested the 200-day last week and got rejected, rolled over. Focus on materials, that's improving. Materials, energy, utilities, and consumer staples. There goes Meta. Meta's on the move. Okay, what's going on with Meta? Are they buying Meta? I think Amazon looks good. Meta's looking good here. Meta. Okay. See the problem with buying down here? Meta. There's two things here going on. Number one, shorts are covering. Number two, people threw away shares. Number three, you run the risk. Buy some now. I'm not saying don't buy Meta. What I'm saying is if you're going to buy Meta, put a stop underneath 518. Scale in. Don't take 1,000 shares right here. Take 100 shares. I'm using as an example. Buy 100 shares. If you're right and this follows through tomorrow, you can either add tomorrow or just wait for it to rise a bit more. Add again. Move your stop up underneath tomorrow's low. Okay. Scale in. You got to scale in. If you throw everything at the markets, you run the risk of not being able to sleep overnight, like I'm sure Russell. He's got a stomach made a steal to carry future big positions overnight. You don't know what the market's going to do the next day. Trump can come out and make a tweet that destroys your position. So when you're looking at something like Meta, you see us coming off the low. Yes, it could be a nice reversal. Yes, we could see a V-shaped recovery. However, the odds are against you. So you want to scale into positions like this. You want to take small bites. Don't throw your whole portfolio at Meta hoping that this is going to rally. So what happens if it rolls over? Okay, so you get stopped out. But a lot of people don't take the stops. That's the problem. So scale in, move your stops up as the stock appreciates. S&P is trying to get going here. Meta looks pretty good. Amazon breaking out to new highs. I do have an Amazon position, right? Amazon. Yes, Amazon I do have. April. Okay, April. Okay, we got a couple of points to go. 205, 210, 205, 210s on Amazon. 205, 210 call spreads. AMD. What's AMD doing? AMD. What's AMD doing? AMD. Nothing. Semiconductors. Nothing at the moment. I was thinking about taking some puts on the semis. Good thing I didn't. We're starting to turn back up. I don't like buying puts when a stock or an ETF is at the lows. I don't like buying puts right here. Better to buy puts at rejection at the 50-day overhead. You're buying down here, you run into that problem where you think you're right, and all of a sudden things start to reverse back up. Like Amazon. Looking good. Now Amazon's persistent at this point. Okay, so what I just saw out of the corner of my eye is very enlightening. Okay, we've got tick cumulative turning up on the 15-minute. That's bullish. Number of stocks trading higher. We started off with about 350. We're at 380 now. 380 stocks advancing. So we're improving as the day proceeds. Tick cumulative is rising. It's green. That's telling me that institutions are buyers. Let me go to the 60 minutes, see what the 60 minute says. 60 minute. Okay, 60 minute is turned. Okay, what about the 4 hour? 4 hour. Your weighted signal gave us a nice bounce this morning there, Grover. Continues to make higher lows. All right, 4 hours. Still got work to do. 4 hour.
Number of canceled flights could get you there. So I don't think it's a particularly earth-shattering call, but it sort of spills out of the numbers that you may not see ASM growth this year.
Yeah, certainly an interesting time for the travel space. The Jets ETF trading lower today, about 7/10. I want to thank you both for being with us to take a closer look there. Nicholas Owens from Morningstar and Sean Cudahy from The Points Guy. And I want to thank all of you for joining us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app in the Apple App Store, and you can tune in 24/7 on SchwabNetwork.com. But don't go anywhere. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking.
Okay, what was NYMO again? I think NYMO was like minus 55 on Friday. The previous Friday it was minus 87. Okay, NIMO is trying to cross over the zero line. Okay, that's a good sign. Number of stocks advancing, increasing 375. Okay, Amazon starting to fade off the high here. A little bit. Need more of these New York FANGs to continue. It's the early innings. So in the early innings, you want to be scaling into positions if you're buying pullbacks and you're looking to be a cowboy and say how great of a trader you are. You know, you want to throw your entire portfolio on one position. Not a good idea. Obviously, I don't think anybody's doing that, but it pays to see more confirmation. Right now, I see tick cumulative turning up. That's a good sign. That's a good sign. First of many. Okay.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant, I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Let's see how far we go with this. Apple, a little short covering now. Apple's turning back up. Apple looked so promising last week and just fell out of bed, right? Apple looks so promising on Thursday, reversed on Friday. Now we're below the 200-day. 246 being tested again. Building facilities here in the U.S., partnering up with several companies. Not enough, though, it looks like. I believe they're going to make the iPads here in the U.S. Tesla rolled over. Okay, Tesla, no follow through. This is not what I want to see. I want to see persistent buying. Not happening yet. So people are still reluctant. Tesla's just sitting down here. Okay, Nvidia, same thing. All right, that doesn't, for a stock that has a 20 multiple, a PE, a 20. Expecting to find some buyers eventually. They're not showing up. Microsoft, been in a downtrend. Never-ending downtrend since back in October. MACD stochastics, they're ready. They're primed and ready to go. You got a ceiling here at about 390, 391. That ceiling right there, that's going to be your first resistance. Then we got to achieve 420, 422. Got to take that out. I've said it before, but I'll say it again. I am looking for a multi-day rally. I do want to buy some more protection. I took those put flies that we had. I took those off last week. Probably a little bit too early. But I took the put flies off. So I'm looking to take them again because this conflict doesn't seem to be resolved.
big boosts in aluminum when a couple of one of the plants was hit. One of the aluminum plants in the Middle East was hit. So there's still concerns out there. And the longer that this goes on, that doesn't mean a 10% correction gives you that all clear signal to start buying risk on equities. I think this is.
Yeah, he's saying the same thing. Just because we're down 10% doesn't give you a risk on, a risk on signal. A lot of things have to fall into place. Junk bonds need to bounce. We still haven't seen junk bonds bounce substantially. I'll take it back. All right, so we got a nice little bounce there earlier. This was down at 94.80. Maybe we build something here. S&P is rolling over. Okay. Oh boy, my Apple's rolling over. Apple's below the 50-day. Doesn't look good for Apple. Amazon fading off the high of the day. I just can't help but think that bull's going to get trapped here if we don't get some sort of follow through. Maybe it shows up afternoon. Okay, let me just switch channels here. Maybe it shows up after 2 o'clock. Generally, we look for institutions to show up after 2 p.m.
Today will be the first time that WTI crude oil has closed above $100 since 2022. So I don't know. You just can't break that attention that you have to give oil, and as it moves higher, the response concurrent in the equity market.
I mean, the market seems to be, able to get its arms around $100 for assuming that it doesn't go from 103 to 113 to 123 to 33 to 43 to 50, if not higher, Kerry, even as some on the street and even within the U.S. government are sort of gaming out the idea, well, what if it goes to 200? But that seems, a ways off. There's no point really debating that because it depends what happens and where the war goes. But for now, we know.
Okay, what does hedge flows look like? All right, look like we're going to start to trend. No trend again. No trend. This has to trend. Let's see if I can give you a good example. Let's see. Wednesday? No trend. Wednesday. Tuesday last. Yeah, that's a trend. You see the difference between the trend that we had last Tuesday compared to what we have today? There's no trend. We're just kind of sitting here. This needs to make a higher high and start going. Okay. It's hardly anybody trading. 0 day. Wow. Brent's going to be on at 1. I'll listen to what he has to say at 1 o'clock. Brent Kuchabar over at Spot Gamma. They just came out with an update on Trace. 15-minute. Oh, speaking of multiples, I haven't looked at this in ages. Multiples.
Sustainability of this oil increase, right? Because if it does come in the next few weeks, we will then discount that earnings hit at least for the next couple of quarters and say, okay, the long-term trajectory of oil is at $70 or $80, and that's really a one-off thing. But if this is kind of a sustainable, not only are you
multiple expansion,
you're going to have the future.
You can see the green line, the green area. You can see how that continues to just sit here. Multiples. We need some multiple expansion. I guess that's not too bad. We're hanging in there. Markets are pulling back. We're below the 200-day moving average, and multiples are staying pretty much intact. That red line is rising, which is good. It's not turned down like it was back in 2002, 3, 4. So that looks good. All right, I'm just talking out loud. Don't mind me. Amazon, just watching.
much higher than recession probability. And we agree. We would continue to see 7,800 on the S&P as achievable, assuming a recession is avoided, which remains our. As long as that doesn't happen, I still think stocks can perform pretty well. Is that the fair way to think about it?
I think it is a fair way to look at it because we have more unknowns right now. But if there are some more knowns, then we look at kind of the internals of the markets and the stuff, the sectors that have done well. And Joe mentioned financials have done well, but they were down 12% before that. So you look at kind of the areas of the markets that have really been hurt, whether it's basic materials or some of the others, and you can kind of pull from the energy side. So I do think there's some potential there, and it's just like you said, wait and see right now.
You have had a fair amount of selling from the hedge fund community, to which Goldman's desk is taking a look at that, and they say there's some signs of capitulation are starting to emerge. Which, if you consider it a contrarian view, it's like maybe the selling is getting a little exhausted from that standpoint. Last week, hedge funds net sold equities for a 6th straight week, and the fastest pace since April of 25, liberation period, obviously. On a trailing 6-week basis, the recent U.S. net selling by hedge funds, the 3rd largest over the past decade, and starting to approach the levels in April, May of 2020 during COVID, and to a lesser extent into Liberation Day. So people are trying to look at those signs as saying, okay, maybe we're really close to the end rather than the start of something even bigger and more dramatic.
Yeah, I don't disagree with that, but you also have to look at where the hedge funds came from. I believe going into that, they had very high leverage, like top leverage they typically take. So they're reversing that bet or taking that bet down. But look, I think the only thing that really gets it down meaningfully is if we do go after Iran's energy assets and put them out of commission, because they are a large part of OPEC. Or if we put boots on the ground, that'll be a major laydown. I do expect continued volatility, and I do believe that it continues to go down, but I still see overvalued. Now, take a look today at the GEVs, which I own, FTAI, Vertiv. All these stocks are going down pretty significantly today. So they're still looking for profit taking in those names. So where the selling is subsiding, like a Microsoft, I guess we'll talk about it later, where there has been a lot of selling. So the reason I bought Dix, we go back to that, is because I think it went through the wars already. Stock's down significantly. Look, everybody knows consumers hurt now, so I see upside from there. So I still think it's a
Bitcoin is trying to do something. No follow through in Bitcoin. Okay, Bitcoin. What are you going to do, Bitcoin? The markets are just chop. ARM holdings, choppy at the 200-day.
Stabilize, or this market's not going anywhere. Absolutely not, with all the questions hanging over now the broader economy, the global economy, with the spike in oil.
Amazon.
First week in a year, right? Nasdaq's down 10.
Amazon.
11 weeks. It's never done 11 in a row. No, it's never. No, it's never done 11 in a row. Mag 7 over that period of the losing streak, actually last week, 800 billion plus thereabouts in market cap from what these stocks have done, led by Meta, which is
Looks like we're going to miss the March. Maybe it starts off in April. Generally, we look for that March. Over the last 20 years, we've been looking for a bounce this time of year. Look for a bounce this time of year. Mid to late March into April. Okay, let's go look at. Okay, so last year, of course, we know what happened March, April. Okay, we got the bounce in April. Okay. We're just shy of 10% off the highs, so we're looking for a bounce. It's going to be obvious. It'll be really obvious when they start to buy institutions. Can't help but think we could move a little bit lower first.
it's shooting the generals, right? A necessary but painful development. Well, maybe it was necessary, and maybe it has been painful, but maybe enough is enough.
Maybe.
I do, and I own Google, and you know, I own most of these, and I think, yeah, it is a clearing price for some people taking their profits. But I also think that these are really great cash flow companies with great margins, and they have levers to pull. So if they see certain things in the market where it's demand, if it's data centers, it's et cetera, they have the ability. It's not like they have to go to capital markets all of a sudden to get cash flow, which could then in a credit crunch cause issues. They can pull back and they still have demand. So I do think that I wouldn't sell it at these levels because I think they've gotten down too much.
And you can't just add one thing. Yeah. I still have similar plays. I haven't shaved Meta. I haven't shaved Alphabet. So I'm well versed in this area of my portfolio. So it's just one. It was just too much.
The way that the multiples, Joe, have compressed here leads me to ask the question that I did. Have they been washed enough? For example, at the high, Meta's PE forward was 24 times. Now it's 18. Okay? That's a significant come down in terms of the valuation. Microsoft was 27.5. Now it's 20.5. Alphabet was 30. Now it's 24. We'll get to another one. Like NVIDIA was 25.5. Now it's 20. NVIDIA now trades, by the way, at a slight discount to the S&P on a forward PE or right around par for the first time in 10 plus years. It's the cheapest it's been relative to the S&P in some 10 years.
So I appreciate Steve's remark that he was still maintaining exposure in the Mag 7, because I think that's the right thing to do. First of all, I think you have to look at leverage at all times and look at positioning and understand, as Steve said, we came into 26 with everyone extensively long. We worked that off. Right now, the system is sitting at neutral.
Apple trying to turn. Yeah, the markets are just chopping people up. S&P 500. We're going nowhere. Going nowhere. Okay, today's range. This is today's range. We're in the lower half. We're in underneath VWAP for now. Okay, so we're in this range. Okay, we're in the lower half. We're below VWAP. So S&P needs to get back above that. Okay. Meta has a reason to bounce for bargain hunters. Again, if you're gonna buy Meta down here, don't go balls to the wall 100% of your portfolio. You know, if you're gonna take 1,000 shares, just take 100, take 50. If this follows through and moves a bit higher, then you can add to your position. That way, if it does roll over and the markets don't hold their ground, you're only wrong on a partial position, not the entire portfolio. Okay, ARM Holdings making a new low here. ARM Holdings at the 200-day moving average. ARM just not acting well. ARM Holdings. Back down to the 200-day. Okay, they keep selling like the 10-year yield is moving higher. They keep selling these tech stocks like the 10-year is still catapulting higher. I mean, it's still pretty decent, 4.3%. It's still pretty high. I don't know. ARM, they're still selling. Stocks like ARM, Micron. Micron looks terrible. It's in no man's land. The 50 days overhead, the 200 days below. Everybody's probably looking at this going, I better sell this. I better sell it. They keep selling. At some point, the institutions will come in. Micron's numbers were good. They sold earnings over the last week. Oracle, Swarmer is starting to turn back up. SWMR, Swarmer. Okay. I love the idea of this company. Software to control hundreds of drones at the same time. Seems like it's in the right area at the right time. Palo Alto, Trade Desk, Zscaler, CrowdStrike, Team, Atlassian. That's the top 5 on the NASDAQ 100, followed by Workday, Verisk, Datadog, Intuit, and Autodesk, the top 10. Continuing on, we got Adobe, AstraZeneca, Fortinet, PayPal, Take-Two. That's the top 15. Continuing, PepsiCo, Take-Two, Centos, Orly Automotive, Roper Industries, Old Dominion Freight. That creates the top 20. Okay, so the leader is Palo Alto Networks right now on both the S&P 500 and the NASDAQ. ServiceNow number 2 on the S&P. Trade Desk number 3. CrowdStrike number 4. AJ Gallagher number 5. I'd be surprised if Josh Brown doesn't mention AJ Gallagher. AGG. Let's see. AJG. Okay, that's the double bottom. AJ Gallagher.
Let's hope it can first defend what's going on in the moment. I said last week I voted at 250, buying it against the point of reference at the 200.
Okay, AJ Gallagher. Let's see what this looks like. AJG. AJG. What's the earnings look like? AJ Gallagher. Yeah, it's at the lows. Not surprising. Double digit earnings and revenue. Insurance brokerage, third party claims. We got some bounce. We got some stocks in the financial group rallying today. Okay, so financials over here. Financials. American Express up quite a bit. It's not following through. AXP. Off the low. Okay, so I would imagine institutions will start buying down here. American Express. That's nearly 100 points off the high. American Express.
Stock has been, dare I say, rewarded for it. And, the defensive position of Apple.
American Express. American Express. AXP. AXP. American Express.
It's like a consumer staple in there that you just keep on having upgrades and you distribute and you get bigger and bigger. The moat gets bigger as more people stay in there. So I think that's why you don't see that multiple kind of, the opposite, right? It doesn't get depressed. It's still growing, but it's growing 4-6%. But we know that it's a defensible position.
You still have issues in tech today. Nasdaq's just gone negative. AMD down almost 2%. Micron.
Bitcoin back off. Yeah. Bitcoin bipolar here. Can't make up its mind if it wants to go or not. Bitcoin choppy here as well. I mean, do you guys really want to, and ladies, do you really want to trade this for 15 minutes? I guess some of you are doing that. Not worth the mental energy at the moment. Micron down 7%. Micron looks terrible.
Sandus was down 9.5% last week. Western Dig down almost 5%, and Seagate down almost 4. $100 billion in market cap wiped last week.
Yeah, but this is the life of semiconductors. I mean, we know over time semis have been cyclical.
Do recall that July tends to be the strongest month of the year for tech, semiconductors, etc. So March, April.
Cyber names, are they going to stabilize over the last week? Double-digit declines for many of the names there. Zscaler is getting a nice move today. Last week it was down 12%. I saw Palo Alto's Nikesh Arora buys $10 million in stock in the open market. That's an interesting move. Obviously a sign that he thinks his stock's declined too much. The stock's getting a nice move there as well. You sold most of your exposure here. I still feel like this is such a favored
Okay, let's see here.
group. Do you feel like that's changing?
Let's see, Micron. Micron. MU.
I don't feel like it has been lately. It's been almost consistently bearish because of Anthropic and these new tools that Anthropic unveils seemingly every week. One of which has had a negative impact here. It's almost changed the endlessly bullish story.
Hedge flows, no follow through, just chop. The other thing that I'm waiting for is to see Money Magic posting the opposite of what he was posting last week and the week before. I think it's been like 4 weeks now, Money, right? When you started first seeing all those puts coming in to the I believe it was the Qs you were looking at, if I recall correctly, 4 or 5 weeks ago, 6 weeks ago, I think it was. You were talking about all of the puts that were coming in. So that's the other thing I'm thinking about. Some of the indicators I have are not necessarily indicators, but people in the trading room that tend to be on the ball at turning points. TSSI looks good. Yep.
Now's not the moment. Has price and fundamentals disconnected from one another in private credit? Because those stocks have gotten punished. The Fed chair, by the way, was speaking this morning at Harvard, in which he was asked a great question by a student, I believe, in the audience, and gave an interesting answer. He said, "We're watching it very carefully, looking for connections to the banking system that could lead to contagion." We don't see that.
Oh man, this is just so. How many more weeks do we have to put up with this, right? Okay, now we're starting to look a little bit more bearish. We're below VWAP. Just about the time you're thinking about, okay, I can't take this anymore. I got to take some puts right here. Or reverse back up to VWAP. Chop, chop, chop. Okay, hedge flow's turning back down.
Until we see something other than some one-offs, I think even the Fed's watching it and saying, "Hey, yes, there is something to watch, but it doesn't mean you necessarily have to sell all these stuff."
I think the financials, broadly have been hit. You bought more Goldman Sachs. Do you think it's been unnecessarily punished by some of these issues? Just the broader worried about the economy or whatever else? Lack of capital market activity because of all this?
So it's best in breed. It's had relative outperformance to its financial banking peers. I think it thrives in this type of environment of hyper volatility. I think they're best in class. Position since April of 24. I wanted to add some financial sector exposure. I don't feel, to your question previously, comfortable enough. There's a strong degree of clarity surrounding the fundamentals of private credit to step in that direction. I have no exposure there. I would at some point. I'd probably look at Blackstone. But to me, Goldman Sachs is the clear winner in this environment, and it's proving itself
with the price resiliency that it exhibits on a daily basis.
All right, let's take a quick break. Gentlemen. We'll get into our calls of the day. I got a negative call that's really hitting the stock that Kerry owns. It's a new 52-week low. We will discuss coming up.
Oh boy, I hope you're having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, March 30th. Tomorrow we've got the JP Morgan collar roll. Looking for more conversation about that. Today, tomorrow, Netflix, no follow through. No point at this juncture. No point in doing anything. Just the markets just are not conducive to buying and watching prices move higher. They're just chopping people up. Just about the time do you think that this is time to buy some puts? Counterintuitive. We may bounce or even test the low, I guess. There's Friday's low right there. I came into the week thinking that at the end of the week, I came in thinking that, we would pierce this level and then reverse like we did back in April. Not seeing that right now. So if you're buying, you got to be looking at XLU. Okay, utilities, consumer staples, XLP, energy, obviously, a bit extended on the energy front. Materials look pretty good. These are all starting to stall midday. This time of day, you see BNC pivots. You see these little pullbacks anyway, so I wouldn't read too much into it at the moment. Communications, that should get a lift with Meta bouncing. Communications, XLC. Okay. These could easily roll over, You might be saying, oh, this is the bottom. We're going to shoot back up to the upside. Don't be too quick. Markets are still iffy. I'm just very, very perplexed with the 10-year yield. That gap down. Right in the middle, between 4.2 and 4.4%. If we can ease back towards 4.2, 4.3%, that'd be much better. Junk bonds, slow to move, sometimes slow to move. Okay, we are bouncing off the low. So this is more of a neutral signal, neutral to bearish. US dollar. US dollar.
Reuters is now reporting that SpaceX could cut Robinhood and SoFi out of its IPO as brokerages negotiate for a piece of the offering. E-Trade now apparently in the lead to handle share sales for those smaller retail investors you were just talking about, Scott. Hood shares initially plunging on that news, though they've pared losses. And of course, that move is getting extra attention because SpaceX is considering giving individual investors an unusually large piece of the deal, reportedly potentially as much as 30% versus the more typical 5 to 10%. The timing and size of this IPO is still fluid, but reports have said that SpaceX could file that paperwork as early as this week for a $75 billion raise at a $1.75 trillion valuation.
We have any indication as to why a decision like that would be made?
That's what we're looking into right now. I'll come back to you with that.
Okay. Mac, thank you. That's Mackenzie.
He's being very peculiar or particular about how he wants to run this. And he wants allowed to go to retail. He doesn't
Swarmer trying to make a new high here. Swarmer, if you're trading it, watch Swarmer. Okay, Swarmer trying to make a new high.
Except that he wants pure retail. He doesn't want to associate it with other businesses, possibly. So, don't know. It'd be interesting to understand why. But a lot of his reasoning we don't understand. So,
there is a call on Robinhood, Joe, and so you must have some level of thoughts. You own the stock. Target goes to 130 from 160 today. Still outperform at Bernstein. Yes, it's obviously been weak of late, they take down their target multiple by, from 40 times to 35 times. Crypto's been an issue clearly. But
okay, let's look at, let's see, Lockheed, LMT, Lockheed Martin, no follow through, Caterpillar, Cat, no follow through on Caterpillar. That looked so good last week. I almost got into Caterpillar. I didn't bite.
Triple-digit gainer, and it was crypto that broke it. You have to be able to see the visibility of the diversification story that this company
Copang.
is speaking about. You have to come in and see it.
Okay, so what I just said a few minutes ago about, you get impatient. You say, "Oh, it looks like the market's going to roll over. Let me buy puts here." And what happens? They push it back in the opposite direction. And now you're sitting here going, "Why did I buy puts at the low of the day?"
Environment. I don't understand the reason. All right, let's move to the stock that I teased before we went to break. It's Boston Scientific. It got downgraded today. Now, it was a strong buy, and it's only downgraded to outperform. So we're not talking about a tremendous move down by any stretch. The target goes to 88 from 97, so significant upside still from here. It's a 52-week low, and it's down 17.5% over the last month. You own the name.
Yeah, we just bought the name because we thought it had come down so much, and at 16 times earnings, we thought this is an attractive entry point. I mean, the device business is solid. They might have some timing issues with electrophysiology and the Watchman device, but we believe it's going to happen because they're best in class. So BSX, yeah, tough time to buy it. We wish we had waited, but it's more attractive at this price here.
Bristol Myers reiterated by Surratt, $70 UBS. That's you.
Yeah, I mean, it's a tale of two cities, right? When tech goes on fire, other sectors like the growth sectors go, nobody cares about pharma. Now it's...
Okay, so with regard to Swarmer, the CEO is claiming that upstarts like Swarmer will out-innovate legacy defense firms from in the autonomous drone software sector.
Wells Fargo reiterates outperform today, 425. They say buy it on the weakness. What do you think?
I like it. I mean, look, they're in the right space with their consumers. They really have this attachment rate of a lot of people buying, not just, the platinum card. And I think it's a sell-off just as the cyclical economy. It's the
Okay, so let's take a look at California Resources.
You sell now, ask questions later.
Pippa Stevens has the news update for us today. Hi, Pippa.
Hi, Scott. An oil refinery in northern Israel was struck during an Iranian missile attack this morning. According to Israel's Fire and Rescue Service,
Sorry about that.
debris from an intercepted attack directly
S&P.
hit a tanker at the facility. Large flames and thick black smoke were seen at the refinery that has been targeted in previous Iranian attacks.
Boring.
Air Canada announced today that President and CEO Michael Rousseau
4 or 5 weeks now, we haven't had much of a rebound rally.
after the deadly crash between an Air Canada jet and a fire truck at LaGuardia last
Keep
week.
looking for signs of
Canada's
one.
largest airline
Not
is based
happening.
in French-speaking Quebec. The board of directors
Let's
said
see
being able to
what
speak French will be a criteria they look for in the company's next leader. And more than 400,000 Kit Kat candy bars have gone missing in Europe. Nestle says the vehicle carrying about 12 tons of the candy bars is nowhere to be found. The shipment disappeared last week while on its way to Poland for distribution. I guess someone has a big sweet tooth, Scott.
Yeah, to say the least. Pippa, thanks. Pippa Stevens. Coming up, searching for stability. One firm out today with an interesting new list of names they think that outperform in the coming month. We'll tell you what they
California Resources, another like AWK from the utility group, AWK, American Waterworks. These utilities look pretty good. They continue to catch a bid. AEP, Edison, Con Ed, EIX, Duke Energy. Speaking of Duke, you see that UConn Duke game? Man, the Sweet 16, that's been really great the last week or so. Some really cool games. Duke Energy, Dominion. All of these look good. All of these look good. Utilities, consumer staples, Coca-Cola. Those will most likely follow through. Coca-Cola, PepsiCo, Campbell's Soup, ConAgra, Archer Daniel Midland, Tyson. What's Tyson Foods doing? Tyson at the highs. What's Sprouts Farmers Market, SFM, Sprouts Farmer? Yeah, that looks pretty good. Okay. Kroger bouncing. Okay, all of these consumer staples look good. So if you're looking at places to put money to work, you're impatient. You keep throwing money at tech. Tech is not the best scenario right now. Yeah, day trades a different story. Day trades, but if you want to swing trade for a few days and you're trying to negate some of the losses in software, if you got a lot of software names, I'd be looking at the opposite. I'd be looking at stocks that are doing well. Consumer staples, utilities, energy. Energy is more tough. Energy is a little bit more tough because we are at highs. Feels extended. Feels extended. Yeah, so consumer staples, that's a pretty good bet. Utilities, that's a pretty good bet. Just make sure that you're buying like something like AEP, right? Watch for an ABCD pattern intraday. Look for a follow through. You just had a little dip right there. Probably follows through. Utility stocks, AWK, all of these. CRC, California Resources. Let's look at the 60-minute time frame. Make sure it's above the 60-minute 20 EMA. You can see how this looks so good. Campbell's Soup, turn in the corner. Campbell's Soup is probably going to be about a multi-week rally, I would think. Campbell's, just sit tight with Campbell's. Molson Coors, STZ. Okay, flat. What is Diageo? Bud. Anheuser-Busch trying to turn.
Delta hit a high of 70, 64. Given what's happened to all the cyclicalities of all the other stocks, it's held up the most. Planes are still flying. Ed Bastian came out just a week ago saying they're still seeing strong demand. And I think, again, to the point we talked about before, if oil does come
Cruise lines, travel, booking.com, BKNG. That's one that Russell likes to trade. If you like trading booking, make sure you're paying attention to what Russell has to post.
Another one, right? Rates have backed up. Mortgage rates have
PHM. Okay, these are trying to turn the corner. The builders, Pulte, Toll Brothers, Beazer. Not quite there, though. Apple tried to turn the corner, was rallying for a few days, and then lost the 20 EMA. Microsoft. Okay, Microsoft is trying to turn the corner. These moving averages need to turn up and to the right for a multi-day rally in Microsoft, if that's what you're thinking.
Here we are, spring selling season. I'm not so sure how active it ultimately is going to be with the elevated private sector borrowing costs for mortgages.
Weiss, Caterpillar on the list.
I wish. I mean, to me, as Ferd, I was playing momentum in data centers here. The stock is not attractively valued at this level, so
It's very expensive.
Yeah, so I wouldn't be surprised to see more downside. I'd say all those names on that list, pretty much are ones that have bit the dust. So they say they can't go down more. There's a reason to buy it. Not that they're typically stable names. I don't believe they are, with the exception of maybe
Danaher. What about Danaher, Sarat?
Look, Danaher, Thermo Fisher, high quality businesses. Really, the effect of what's going to happen to the administration with the RFK, but then also internationally and government spending. I think these are ones you own for 3 to 5 years at least. They're terrific compounders and high quality businesses.
What about Uber, Joe? Uber is on this list.
No.
No?
Nope. Unfortunately, I don't see it. Look, in the names we're reading,
Not on Joe's list.
to me, it's energy. Uber's broken down. It's energy. It's maintaining your energy exposure, even if there's some form of resolution. There's oil prices are not going to implode down to $60 that quickly and return to where they were. There's still
I don't
going to
think
be.
they have to, though.
There's still going to be
that's a
challenges.
huge relief.
Yes. There's still going to be challenges in front of us as it relates to energy, the consumer staple names, the Coca-Cola, the Monster beverages,
Coca-Cola's
those
on the list.
Those are the that's where you find the stability in the market. And there's one sector that I don't find on this list that I think you should be looking at, and that's healthcare. Because healthcare provides you that degree of stability in this type of hyper volatility environment. It proved itself in 2022.
The bet here was let me find stocks that have been crushed, and I don't think will go down anymore, rather traditionally stable names aside from Coke.
All right, we'll take a break. We'll come back with Santoli on the other side. This midday word.
All right, WTI, Transocean, pull them back in.
So it's kind of hard to put a single number on it. But we will say that, like, we're very proud of the return. You know, branches and businesses, right? So it must return. We've been on that from the start, and that's like a core part of how we price it, the value from it.
Where are you seeing the strongest adoption, Greg?
Yeah, we're in 22 states at the moment in the US, and we're trying to hire as fast as we can to be available in the others. So we're mostly through like the Mountain West area at the moment, and we've been blown away by the demand here. Like in the US, we've been here for maybe slightly more than a year, and just the awareness and the excitement, and I guess the results we're seeing on customers has been like really exciting. And then New Zealand, where we started. I think we're on almost like, we're throughout the country there, on like 10% of the cattle in New Zealand. So, yeah, it's going on.
What are the barriers to adoption, Greg? Do you find, like, is it cost? Is it trust? Do you come across a lot of ranchers who say, listen, they've kind of just always done things the way their father did or their grandfather did?
Mm-hmm.
Our philosophy on this, when it comes to the product development, is if someone doesn't want to adopt it, well, that's our fault, right? Like, we have to make the product easier to use or more valuable or more fun to use, like whatever it is, that's kind of on us. And so I think we don't really buy into this idea that ranchers or farmers are slow to adopt. Like, yeah, that's kind of the wrong way to think about it. And so, and frankly, we're seeing growth and adoption at a rate that we're struggling to hire and keep up with. So, but the biggest barrier would probably be SXTC. There's not much point buying Halter if you're not going to change how you run your operation or how you run your ranch. Like, if you buy the tool and you don't use it to be more efficient, more productive, and you just use it to make life easier, that's fine if that's your goal. But obviously, a lot of our customers want to return, and so there's usually some element of system change to that in terms of how you run that ranch to get the most out of it.
Greg, so good to have you on the show today. Really appreciate your time. Thank you.
Thank you.
And coming up, taking a look at the state of crypto.
Sorry about that. All right, S&P is trying to bounce a bit more. Still more chop, chop, chop. MACD is trying to turn up. RSI is trying to turn. Maybe we'll get a little rally into the 1 and 2 o'clock hour. Between 1 and 2, we're looking for a bounce. Okay, Apple starting to turn back up. Apple.
And today we are welcoming David O'Connor. He is a senior semiconductor research analyst at BNP Paribas and a former chip designer who spends a decade building silicon with companies like NXP and Texas Instruments. From the clean room to the street, David, it's great to have me here.
Thanks so much for inviting me.
So let's begin with the big picture overview of how you see the AI trade playing out right now.
Oh, big question. Straight into it. No softball there. I would say on the semiconductor side of things,
Okay, Lam Research, LRCX. These pull back more. Applied Materials. These are getting destroyed.
But also on the hyperscaler, concern around the ROI, concern around monetization, actually the capital side of things as well.
Okay, Netflix.
Up 70% year over year, but the question is how much higher that can go. And there's no good answers, I would say. So certainly right now we
Apple.
these questions to kind of get us through this water world.
All right, it's a tough one. Tough one. The markets are not giving you much to go on other than energy, utilities, and consumer staples. A little bit of materials, XLB. Okay, XLB. Okay, a little bounce there. Shy of the 50-day. Dividend paying ETFs, SPHD turning back up. SCHD. Bitcoin tried to bounce. Bitcoin. SCHD.
What's the most important thing that people need to know or get wrong about hyperscalers right now?
Yeah, I think the most important thing for people to understand, because they are representing 70%.
S&P looks like it's going to test the lows.
As you mentioned, writing the checks. I think the thing to realize is that they're well funded, so they can afford, and that's what is a bit different now versus if you look back at the cycles back to the tech bubble in 2000. There was no cash being generated, so the guys who were actually buying all the infrastructure, buying all the chips, as you talk about, the connectivity, the power, they were not funded. They had no business model. So that's very important to understand here that this spending can continue. And as mentioned, this year,
CHD, what's DIV doing? DIV, that's trying to hold on.
So quite elevated, but at the same
Recording in progress.
Okay, let me listen to what Brent has to say. Brent's from Spot Gamma.
When you think about these names, where are we at now? Because that was really the fear back in the fall, and so has that fear eased at all?
It's the same concern we had 3 years ago, 2 years ago, last year.
FRMI.
Dr. James. Any? Wants to be guys back on the regular. So thank you for coming. A lot of stuff going on today, obviously, with the JP Morgan position, the Iran situation, etc. I did a little segment for Tasty Trade today. I think it'll be out later. I thought I was going to talk about this presentation that I put together, and then it turned into a defined GEX and talk about JP Morgan collar trade. So the good news is that normally I just sort of shoot from the hip on this stuff. Today we'll have a little bit of a presentation.
Okay, just going to listen into what Brent has to say.
If you have any questions while I'm yapping away over here, put them in the Q&A box, and then I will do my best to get to those. Do to see that. Could also talk about the Trace upgrade. 10% of you at random got the Trace upgrade today. And then I think by the end of the week, everyone will have it. Small tranche at first, and then we'll up the size of the tranche. Yeah, Pankaj, we got some changes. And then we're going to use the new GEX tool to talk about what's happening with the trade situation. So this is the current state of affairs here. I'll make this a little bit bigger so you can see it. Why do I call this the sum of all fears? Well, I've been using that is because the idea that oil goes up, interest rates go up, and I was talking to AI like most people do these days, and I said, "What's the closest analogy?" And I was talking about 1970s when we had we had war in the Middle East. Oil went from like $2 to $12 or something like that. Interest rates went into double digits, stagflation. And then Nixon ultimately that kicked off Watergate, which is interesting because I generally think that, you know, when you get people in power like that, you probably look at a lens through anyone who's ever been president and been like, this is a capital offense, right? Just say state of doing the job. I just think that if everything was going fine, stock market went down 40%. At that same time, stock market, you know, and all the other assets are doing fine. Maybe Watergate doesn't ever happen. I don't know. It's my stupid philosophy. Anyway, it's a very curious analogy. Anyways, so some of all fears is still that same thing. Oil, World War III, hopefully it doesn't happen. Interest rates go higher, stagflation, stock market goes creaming lower, yada, yada, yada. We've been in this box, right? 6,600. That was the low of this market. We finally broke that low just a few days ago. Really, it's been taking a while for vol to realize. And I know there has been a bunch of people talking about the JP Morgan position, myself included. And so we're right in this general area. And the question is, will we get back there by tomorrow? Totally. Obviously, it could happen in a second. We saw the tweet this morning from Trump and the knee-jerk reaction now is like 60 handles higher, 40 handles higher. So I still have on some positions that I'm prepared to let them, you know, they're going to expire worthless tomorrow. What happens if Gamma starts working to the upside? You should have dealers have to start buy stock, and that should move the market up. And there's some incentivized, you know, Max Payne theory that says that if we can get this close on 64.75, you know, that put expires worthless, and that's good for the dealers. Only once has the position closed materially in the money. I would say more than about 20 or 30 handles, and that was in March of 2020. And it's been tested probably about 5 times since that. You know, the last time that happened really was March of last year. So we'll talk about that in a second. Oil and VIX still is the thing to watch, right? Oil did go over 100. I've said many times that oil over on 100 is where I think things are going to break. And so, you know, look, oil breaking over 100 says this extra pressure is going to show up. That's a problem. And I thought VIX would go convex. Now, I'm going to play devil's advocate and say, well, why are we not at VIX 35 or something right now? Why isn't the market really moving lower? There were some tweets about a deal. I saw on X some rumors of maybe a deal at 4 o'clock this afternoon. You know, kind of a Trump kick save. Could you make the argument that some of the deltas relative to this position are helping the market? Yes, because of decay, right? That put is decaying rapidly right now as we get closer to expiration. So you can make an argument there's a little JP Morgan support in the market right now, but then all those excuses go away. Not so much tomorrow, or maybe midday tomorrow into the afternoon, right? So on Wednesday, I can't be saying, well, JP Morgan's holding this up if we don't crash. So this is still on, and this is still my guiding light here that, you know, oil breaks out, and I think we're going to see that VIX go 40, you know, plus. The JP Morgan positions in the money, the dealer's short. So if you're short the put versus short stock, and the put is losing money, you go like, hey, I was short 100 shares, the put just decayed, lost 10% of its value. I'm going to buy some of those shares back. So it's the charm. Deep in the money puts, the charm is less important, right? But this is not so deep that there's no vol premium. Correlation is spiking. Why does this matter? If you've been a Stock Gamma subscriber for a long time, you know we talk about correlation under 8 as a market is too bullish sign. We've gone the other way. What's interesting about this is correlation is near 2022 highs. Remember 2022 was interest rates were going up, and the whole conversation was, I can't own bonds anymore, right? It was the death of the 60-40 portfolio. I don't want to own stocks. I'm not sure I want to own bonds. What do I do? Do I own go to cash? Do I own tips was a popular one, I think. Then do I go to gold? Whatever it is, right? It's asset allocation as opposed to what stock do I own? The inter-asset allocation or equity allocation. So we're now back up to this level. What's interesting about this is normally what happens in this environment is when correlation spikes, correlation is blue, you usually get a pretty big vol spike. VIX really kind of goes bananas. Now, we've talked ad nauseum about the fact that, well, there is a big vol premium, but the fact of the matter is we've not been realizing volatility in the S&P, meaning where are the 3 to 5% moves? We've made the argument that there's hedging positions that have been supporting this thing, and OPEX loosened it up a little bit, and when VIX goes over 30, then we get 1-2 realized moves, things that start to happen. But you can see here, right, 2020, huge VIX spike related to huge correlation spike. This was July of last year. VIX went crazy. Then you had the tariff tantrum, where VIX was really spiking. So the gap here is really kind of what I'm focused on, the fact that VIX seems kind of contained. And on the point of correlation spiking, all the points on our skew plots here, this is call skew versus put skew, everything is very tightly contracted here in this corner, which is high correlation, right? Put skew is very high for all names. Call skews is very low for all names, right? Almost uniform across the spectrum. So that's high correlation. This is the spread of the average NDX single stock versus the 2-week realized vol. So single stock vol is actually quite high relative to the index. We call this kind of dispersion trade in the NDX. Essentially what that's saying is, there is still a very big gap, and this is, I would say, anomalous, right? Again, where is the index realized vol? When does it kick in? At some point, I think it does with oil over 100. That's the risk. And if realized vol kicks in, that's where VIX starts to go moody, right? 40 or 50. Realized vol on this point is now 14. It was 12 last week. We got 2 pretty big days of downside, right? We had a 1.5% downside day. Last week, that was the biggest down day in the last 30. So that's pretty substantial. And the thing that's interesting about this, when you talk about volatility in the equity market, is this histogram of the last 30 days is, normally you see a very clean and cute bell curve, right? Well, in this case, it's much more of a flat distribution, meaning we're getting big moves down, relatively big moves up. But I think if this thing resolves with the Trump tweet, we're up huge, right, in a day. But the idea that we finally get one of those down 2, 3, 4% moves, I think the odds of that increase as we get into April because of the fact that these positions that you could argue are supportive of the market, they quite frankly go away. So the fact here that the market is somewhat stable today, even though the Iran situation has definitely gotten worse. And if you go, well, how can you say that? Oil's now over 100. So that's my barometer. Argue with that all you want. Shouldn't we be lower? Shouldn't we be spilling lower? Well, there's the risk of the Trump situation, right? Does he actually have a deal? Say with that about what you want, but then these options flows, which you could make a clean argument.
S&P drifting lower.
This is the spread between the SPX realized vol, which is now the blue line, and the VIX. You can see how wide that spread is at 15 points. It's one of the wider spreads we've ever had. Top 1 percentile spreads kind of thing. And this is the point, right? A guy like Noel Smith or one of the vol traders on quote unquote vol traders on Twitter will say something like, well, the vol is rich. And it is, because that spread is very wide. That's what's that telling you. But the issue is, of course, that realized vol at 15 is pretty dang low. That's less than 1% moves in the S&P. With everything going on, you could easily see some kind of insane move. Just look at every time Trump tweets, it's a 1% move. So if that realized vol picks up, then that VIX versus RV, which suggests realized vol, so it suggests that vol premium is rich, right? It ain't so rich anymore if realized vol goes up a bunch.
Low tick alert minus 800.
In order to maintain, and that's the risk that I think is really embedded in here. So, you look at options prices, and they're fairly expensive, relative to how much we've been moving. But at some point, we're going to have that 2 to 3%.
S&P pulling back to Friday's low.
It could shake a lot of people up. So let's talk about the JP Morgan position here. Those of you got the new trace. I know it's not everybody, but what you'll see is that the gamma calculation has now changed. Why is that? Trace was set up to measure originally the gamma per point, so a 1 point move in the S&P. Why did we do that? Because that's how a lot of other people were looking at it.
Extreme low, tick alert.
Determined that is kind of just dumb. So we've changed it now to be a 1% move. So the gamma values have jumped a lot. The other thing is the rest of the platform measured it in 1% moves as well. So if you go to look at the gamma in Equity Hub, you'll see more of like billions, right? That JP Morgan position now is a $2 billion gamma, which means that for every 1% move in the S&P, there's $2 billion worth of gamma that has to trade just for that strike. If we rally from here up into that strike, that's about a $4 billion position. That's a lot, right? And that's constant hedging. Market goes up $4 billion. Market goes down $4 billion. Market goes back up $4 billion. Market goes back down. We have another $4 billion. It's not like a one and done. Like, oh, I bought my $4 billion worth of Google calls. I'm done, right? No, it's constant, persistent hedging flow. So it is notionally a big deal. Last we talked about the March situation last year already on this conversation, but you can see the JP Morgan position is at 55.65 in the quagmire of tariffs last year. We closed essentially right on that level. The market crossed that level intraday. I think we closed clearly a little bit around it, and then it took 2 days, and then the market absolutely just puked, right? I'm not saying that the puking was solely based on the JP Morgan position. There was some more tariff nonsense tweets and stuff came out, but all of a sudden the ball started to realize, right? This is what I mean by that. You have huge swings. So you could make the analogy here today that you go, well, shouldn't we have these big pukey moves given the Iraq situation or Iran situation and the rhetoric increasing and the oil's higher and software feeding AI and all that sort of stuff. And you go, well, yeah. Maybe this is the moment, right? The positions get cleared out, and then you start to get that big downside. The timing is also just so interesting, right? Because you've got the 3-day weekend here, which offers maybe a little bit more decay, generally speaking, but you don't want to be short options right over that 3-day weekend. Troops, they say special forces are now in Iran, more on the way. We were told no. So like, the all of that rhetoric could change, right, very quickly, and if it does, then you start to have that realized right. So the clearing of the puts here is my point. Why? Because JP Morgan, the new position is going to go from here 64.75 down probably 5%. So you're talking 6,000 area, 6,100 area, right, is where that new long put's going to be. It's no longer in play. It's no longer the strike to offer any sort of flow to the market because it's 5% lower and it's 3 months out in time. It's just not something that's going to talk about anymore. What about jump risk? What does jump risk mean? Jump risk and volatility are very similar, but the jump risk is best explained by Trump's tweets, right? Last week we had a 4% bar basically overnight on the 23rd, right? Because of a tweet. Bam, 4% up. What in gosh name, what is that, right? And that was a massive tweet. It was faded, but then look at these other tweets in here where you get these candles. This morning we had them, right? They're 40 handles in a tick. And Trump historically, this has been, or over recent weeks, they've been market positive tweets. So the jump risk has been to the right. And what's interesting to me about that is, as a trader, and you say, I want to sit here and be short the market, right? I'm going to own expensive puts, right? They're expensive. We talk about the vol premium, but I'm going to constantly be sitting here with this right tail risk of the market ripping 3, 4, 5% in a tweet. Very hard, right? To sort of sit here and say, I'm going to have this material, especially short position. I say especially short position because market goes up over time, right? You stop looking at your 401k and come back in 10 years, market's probably up, right? As an example. Also, options are expensive, right? So the longer the market does nothing, the more that vol is going to come down.
Low tick alert minus 800.
So it's very tricky to sit here and be short with that jump risk. And that jump risk is the tweet, right? Now, God forbid the tweet goes negative, and I don't know what would happen in that situation, but right now that is those candles, right? On this point, if you own options, always have a bidder offer, or excuse me, if you're long them, always have an offer out at some stupid price. Leave it out there. Because when he tweets and you went to the bathroom and things up 2%, you get filled. So, what about this? This is from the SIBO newsletter this morning. They say that put SKUs coming, I mean, they put down arrows there. It's kind of funny. I don't know that that's really moved that much, and it's strike law. But you see that call wing is starting to get big.
Just listening to Brent over at Spot Gamma.
The Trump tweet risk, etc. And this actually syncs with volume increasing. This is not simply calls getting bid up. You can see call positioning is starting to improve. Put positioning is starting to come in a little bit. The other thing I want you to note here is that you can see the pivot here of the SKU. If you looked at the GEX this morning in our note, you can see that all of a sudden the downside gamma here has really been kind of cleaned up. And so there's been an easing of pressure, I think, on the put wing. We're starting to see that call wing bid up. On this note, I would say this morning was one of the harder notes I've ever written. Normally I have a pretty clear view, or a view that is clear. Really hard this morning because the put positioning getting cleared up this morning, JP Morgan position is going to roll off, the negative gamma is going to drop a lot. So you start to go, well, what's your catalyst for downside? And you're like, well, oil's over 100, VIX is over 30. That's the tinderbox, right? But the gamma really improved quite a bit to the downside. So you're like, man, that's kind of tricky. And so, you have this moment where it's like, I've sort of
low ticker at minus 800.
Like, no matter what I say, it's going to be short-term contradictory, right? JP Morgan could pop us very quickly tomorrow. So there's that one risk, right? And oil's over 100, VIX is over 30. Things should start to break, but not quite yet because we have the JP Morgan position and maybe a deal. And the gamma got reduced, but that could all change in a second if we get oil goes to 105, and then it's like it don't matter what equity position anymore. So it's like there's a lot of noise today and tomorrow, I think, and that could clear up. But if that oil remains over 100, I just think it's over. So I would love to see a rally here. I mean, I want the war to go away. So the next thing I say, take that into context. But market rallies, it would be a great short opportunity.
Okay, we're approaching Friday's low now.
Rally into that strike tomorrow. It's like, great, that's what I wanted. Like, ball comes off a little bit. We got a market rally, cleaned up some of the shorts, and then, then good night, right? And then last is, this is the 2008 equation where oil went $200, right? And equity vol didn't really respond, meaning the VIX, and then all of a sudden it goes, inflation, stagflation, we're killing the economy, credit spikes, whole thing basically falls apart. And it's such an interesting analogy, right? Given everything that's going on with, granted, the private credit issues are pretty limited, but those higher interest rates, they're just a death knell for everything. And obviously it's inflationary. We're going to spend $200 billion on wars and everything else. It goes against the Doge thing and the cutting. And remember how it seemed like, what's the treasury demand? I mean, it just opens this can of worms that I don't pretend to understand. But it's that uncertainty, I think, that makes it really quite a mess. Are dealers willing to take the JP Morgan put losses? It's not like that, right? They have a put position and they have hedges. That is, the hedges are part of their position. They have this
Semis look terrible.
This is their put position.
Junk.
They're going to take a loss on that put. An options trader, what the price
Junk bonds looked a lot better earlier, starting to fade now.
Why? You have your put as the position, you're buying shares, when the market goes up, you're selling when it go back down. If you're able to make enough money off that trading, that gamma hedging, right, then you don't really care what the actual P&L of the put itself is necessary, right? Because you're doing a lot of underlying trading. So this is the new trace. If you don't have this, wait a couple of days and you should have it. No increase in anyone's membership cost related to the new trace, but we'll talk about a couple of the features quickly. Number one, 1 minute updates. Before we were taking 10 minutes. Now it's closer to 2. The data's every 1 minute. The exchange does not want to deliver to us any faster, unfortunately. It's about 2 minute updates. It's the fastest you can get. As far as I know, we're the only people that have this in production. So that's a big one. All the map will update every minute. Data over here will update every minute. Number 2 is, we already talked about this, the gamma is now.
We're testing Friday's low.
See, oh, that gamma is huge. $1 billion.
The S&P cash, we actually moved a little bit lower, obviously.
If you're trying to wrap your mind around that, don't worry about it. Just look and see 97th percentile strike, right? We've backloaded the data so that 99th percentile is still the one you want to watch. That doesn't change, right? Also, if you go to SPX and the equity hub, you'll see values that now match. So if you hover on the map here, you see we got about $4 billion gamma notional. Look what happens if we rally into the close, into that strike. 11 billion notional. Dang, right? A lot. But this momentum just clearly doesn't want to get started to the upside, which is a problem. So this is the market maker positioning. What does that mean? We have the market maker's position now, and we're just showing you what their position is. Trace, what does Trace have currently if you don't have this? You have customers. What does that mean? Hedge funds, right? The way that we modeled this in the original version of Trace, because the stats were stronger for this, was you take customers, but we're trying to estimate how dealers are going to hedge. So you invert it. And then you get the dealer hedging flow related to customers. And this is the version that you see most closely associated with the current version of Trace for most of you. And if you look at the gamma in here, you can see $8 billion notional and we'll rally to $12 billion notional. So you go, well, Brent, those two things don't match up succinctly. Why? Because customers can be facilitated by market makers, but also banks, obviously, right? If I call up JP Morgan, the bank, and say, I want to sell you a bunch of puts, the desk at JP Morgan will put me up. That's a firm, right? So you're going to see now flow inside the firms as well, right? And you can see that is $100 million up to $2 billion. Why? Because there's a firm that has the other side of the JP Morgan position as an example. So now you're able to break this down into individual entities, right? Market maker, not inverted, statistically the strongest signal for us. We're talking about, we'll be seeing a full set of stats here, but this very much rhymes with the current Trace, right? The market maker flow is just bigger and a little more all-encompassing. And when we have moved this from when we originally launched Trace in September of 2 years ago, the stats here look stronger, right? Also, a lot more zero DTE now, players change, all that other stuff changes, and we're monitoring all this stuff to make sure it's the best ones. So 1 minute updates. What does that mean? Let's talk about the market right now. And this is all, here is, there's just nothing here, right? Nothing. It's not that it's positive gamma, it's just that there's nothing there. And so why is that relevant? Why are you saying, well, why are you pointing out nothing, Brent? Because if you go and look at the founder's note this morning, and we were talking about this, right? Now, this is inverse customer. This is the customer flow that you see in Trace. What happens as we go to 6,000? There's just nothing. It's not that it's positive. It's just there's nothing there. What does that mean? Well, from a strictly dealer hedging perspective, if the market goes down, the more we go down here, the less negative gamma there is for dealers to sell or market makers to sell into that, right? Like the flows drop off. And you remove the JP Morgan position after tomorrow, and then the GEX curve is going to go way up, right? So there's going to be even less gamma. So you say to yourself, well, Brent, that's pretty interesting. I wish I could see that. What is this? You can look into the future now, my friends. This is the projection of the GEX map. You can do it up to 5 days in the future. Indeed. See you. Thank you, Tomby. All right, now people are liking. Why does this matter? Because you see the impact of expiration, right? You can look at that chart and tell me where the JP Morgan trade expires. Yeah, and you can see the projected impact of that trade, and you can go even a little bit farther in time. And so this is incredible because you see how these positions get cleared up. You see where the positive gamma comes in, the negative gamma goes out. Now, this is going to be updated along with everything else every minute of the day from 2 a.m. to 4 p.m. So now you see this giant sucking hole right here of the JP Morgan position for tomorrow. What does it say? If the market rallies, there's a ton of gamma. But now you can see here, right? You know, under 6,300, there's still gamma there. But look what happens on April 1st here. When that JP Morgan position's out, right? When it's gone,
FRMI.
look how much the gamma picture changes, obviously, right? There's some offsetting positions. A lot of these positions are probably related to this position, right? And then you advance just 1 or 2 more days, and it's a very clear picture, right? Positive gamma 6,600 or over, which we'll be looking at as resistance now into a big market rally. And it's just kind of persistent negative gamma down here. That's it. So when you're looking at every single options expiration now, or just 0DT or whatever else, incredible feature, I think, there. And it just really lays out the visual impact of that position. You see $14 billion of gamma at 64.85.
Low ticker minus 800.
800 million, that's it. Like, there's nothing there. Anyways, everything's cool. So, nasty situation here. That JP Morgan position, you know, clearly not influencing the market at the moment, which is just sort of heading south. And there's no real thing to stop this thing heading south. You know, it's just kind of negative gamma into 6,300. Then it really seems to just kind of lighten up. So there's not one big strike down there anymore. It's just spilly downside. And you know, say what you want about that JP Morgan position, but the more we go down, the less impactful it is, right? Because gamma starts to really wear away, and you can tell that because the map disappears. One other thing that is huge. Today it doesn't show as much as it has on previous days. Most of you know that every time the current version, we would update 1 minute, right? Or every 10 minutes. And then the whole map would change, right? This entire map would update, which never fully made sense, but there was an engineering block. It never fully made sense because why would you update the gamma for back here if it already happened? And you know, that was a little bit mildly confusing. I think particularly if you're a new spot gamma user, you'd come and be like, that map doesn't look like it helped me at all. We've now locked that. What does that mean? If you go to 10 o'clock, right? I'm gonna zoom out and see if there's any positive gamma in here. You can see that there's this positive gamma way up here. It works best when you can control the node, but I'm gonna draw a circle around this. So you can see this is kind of a line, right, of positive or neutral space relative to some positive gamma down here. Hopefully that comes out. So I'm going to leave that there, and then as I tick forward, you're going to see that the map now only adjusts in the future. It doesn't adjust in its history anymore. And so, you know, there was my original line that I drew. Hopefully some big trades come in here in a second. So as we're going lower now, the stats are changing, but the map itself isn't changing with respect to, you know, the historical representation of those positions. So hard to see on this day. What was the day? Was it? Yeah, here, right? So you can see this now, right? Where now when you move forward a little bit, this was the line on the day, right here. And then you can see how the market now just moves and bounces on this positive gamma position the whole day, right? So you can see how that just, it's like a moving average. Now, if you look at the old trace here, this would look quite a bit different. And I know you guys didn't come in here to get a new trace demo, but I'm just trying to knock home because there's going to be a lot of questions, and a lot of you are going to have questions, rightfully so. But you see the difference now, right? Now, some of it, yes, is the calculation or whatever, but you can see this was the map look like at 8 o'clock, right? And then, well, how can this part of the map change if it was occurred in the past? See what I'm saying? In Discord, it's a much better trace map. The history itself, I was like, oh my God, this is so much better now, so much easier. Like this, right? Anybody who, you don't have to know anything about gamma, anything about anything, maybe light technical analysis, can look at that and be like, oh, I see. Buy on the blue line. Okay, sweet. Super easy to say. Oh, this is positive gamma. It's the 85th percent no. So don't even need it. It just bounces out this white line. It's crazy. So, yeah. Now, again, today, there's no positive gamma anywhere. So when you're looking at this map and you're like, well, Brent, what do you think about this? I mean, as I tried to reiterate this morning, VIX in the vol premium is huge. What does that mean? I don't know about puts, expensive puts. What insight do I have there, right? None. So I'm in cash because there's a war and the VIX is over 30 and gold, oil's over 103. I got no trade edge there in terms of betting on downside. I got a cheap JP Morgan collar on for today, probably going to expire worthless on tomorrow. They're odd lots, meaning because of the call flyer, they're actually call ratios. They didn't cost me very much. If they hit, they're going to make a ton of money, but it's looking like they're probably going to be useless. But that's my only interesting insight. That's my only differentiating insight. Otherwise, I'm betting on the war getting worse, which it could, but I'm paying a ton for those puts. You're paying a lot for puts in a market that has not been realizing yet. So, that's tricky. I have an odd lot of VIX 50 strike calls.
All right, we just took out Friday's low, looking for a bounce.
So if VIX goes to 100, ball finally does leak out. Okay, great. But what are you supposed to do? And you're like, how sexy is that? I would love to make $1 million on puts tomorrow and be like, look, everybody, I put on Twitter. But that's kind of just irresponsible. Like, what are you supposed to do? Right? So the only edge that I think I may have is a cheap call fly into there. Would I put a cheap call fly on if we didn't have that position? Probably not. But that being said, I have made the case for buying cheap call flies or cheap call spreads based on a tweet or deal suddenly ripping the market. The calls have gotten more expensive now, right? As we showed with the chart here from Mandy Zoom, right? From Seabolt points that out. But also, if you go into the scanners tab, and you look at the call skew percentile for spiders, it's not 21st percentile. Is that crazy? No, but it's not like a no-brainer. When it was at 5th percentile, it's like great, right? You can still find a bunch of names that still have very cheap call percentiles and video and the like, right? So maybe those are more interesting for betting on a 1 DTE. Like, whoa! And that 1 DTE thing is like, I may have to keep buying them. I'm going to spend a nickel every day, and hopefully one day he tweets and we go 4%. I'm like, yes. But, that's it. This is not the environment to take the big swing, in my view. At some point, stuff is going to resolve. Then it's like, okay, VIX goes to 80, I'm going to step up. Or we got a deal, and then I'll have some interesting way to kind of step up, right? How do you see the future? You go into the chart and just move your chart forward. All right, so you pick the 7th, which is in the future, and that's how you get the chart like this. And again, we're going to roll this out to, we'll have a launch period for people who are not Spot Gamer subscribers and all that. Subs always get it first. Members, thank you all for getting it first. If you're in the essentials and you want to try it out, email us, info@spotgamer.com. Just say you're on the webinar today, and we'll hook you up with like some sort of trial period, because this is a major update and it may be more useful to you than you thought. Yeah, so 10% today got it. Why? Make sure the servers work, make sure blah, blah, blah. By the end of the week, all past what happened is we flip it on for everybody. Something weird.
All right, everything's lower. Swarmer turning back up. Trying to bounce. I would think that bounces are going to fail. Like this morning, I didn't think this was going to hold. Lo and behold, we just took out Friday lows. Just listening to Brent over at Spot Gamer. Apple starting to come off the low here. Apple is starting to bounce. Apple is bouncing. below the 50-day moving average. A lot more caution here warranted on Apple.
Well, you know, if there was that
What's the 10-year doing? US 10-year. All right, starting to bounce. US 10-year. We need the 10-year to fade more.
In the last 30 days because the collar is coming into play. This was just last week. Yes, I think so. Now, what about the decay of that position? Well, here's the decay of that position, right? So here you have this charm chart, and you can see in here, right, that very thick decay zone now, where you want to call it negative charm or whatever. You know, that is kind of fine. You can see the delta notional of that is. It's not massive dollars of decay for today. The decay, I think, gets a little bit bigger. But in here, the decay is not that big. Again, the zero DT option is a little bit more decay. And so you can turn that on and see what those bigger zero DT positions are. What is this argument? This argument is if the market rallies into these zones, we should be selling a little bit. What I think happens, and we've tried to discuss this a few times, is
He's talking about this zone up here on the right.
JP Morgan.
This big zone here from 0 up to 3 billion.
It's not so simple that you have on short puts and you have on
Hedge flows continue to move lower.
For one, you're short of put spread, so you're limited in your risk. There's no strike lower which you own. The other thing is you want to find other ways to offset the risk around this position with other options. Because in a perfect world, you basically took this spread on that someone, trade that someone gave you, 64.75 puts, and then you isolate it with other positions, other options positions. Then you just have a small window of risk. And so what in my view that ends up meaning is there's all these little positions, nuanced positions that get cleaned up, right? And I think, you can kind of see it here, I think. I've not actually looked at the 5-day view, like I'm doing this in real time, kind of thinking about this. But here's the charm of that position, right? So here it expires. We know it's going to get rolled before that. New positions will be added on, et cetera, et cetera. So, there's your window. I also have real time now, so I got to turn that off, or extended hours rather. But then you just see like the relative decay really just changes quite a bit right after that position rolls off. So I think of this position, knowing what it is like a busy intersection, right? All this traffic is coming in from a whole bunch of different ways.
He's talking about JP Morgan collar roll tomorrow.
Because it's rush hour.
Very interesting graphic he has up on the screen.
And people paying attention to that strike and yada yada yada. Generates a lot of flow in there. Dealers are, they're clearly in this negative game of position related to this position. There's futures on. They got to roll it. There's a lot of stuff going on. What would be different? Imagine that it was 10 different hedge funds, random hedge funds that had on this position, right? And they may not dynamically roll it. So like there's all sorts of different stuff going on. That would maybe change the complexion of the position, I guess, a little bit, in my view. So in a normal environment, you would look at this and say, deep negative gamma, we should go down. This is a different situation because we know what the trade is. We know when it gets rolled. There's one player out there. So I'm saying it is changing the nuance of this trade. We covered this recently. Yeah, it increases the precision a lot among I think so. Now for the
S&P is still trying to rally a bit.
Okay, so that's done. Another thing. I love Discord. I just rolled this out. New support bot. Go under support, go to support bot. As you can see here, it wasn't the greatest answer right here, but I'm monitoring this actively and I'm updating this. Why am I bringing this up to you? Because it takes about 24 hours, but our webinar replay transcripts are going into this support bot, so you can ask it what Brent said about something on the webinar. Or if you missed the webinar and just want a quick review, it should be able to give you that. It should also be able to tell you about the trace updates, give you some of that information, so you can ask this again, the support_bot here. it is relatively new. I kind of just snuck roll this out without engineering knowing, so I'm making sure it doesn't break or it's self-healing. It's getting better as it goes. So be aware that that's there, but it has the webinar replays. That's why I brought it up. So if you want to talk about the JP Morgan or see what I had to say about it last week, see how I was obviously right. So at the time, you can ask it that, or where did Brett maybe mess that bugger up? You can ask it that as well. Yeah. I put a few Easter eggs in there, but a spot game, a subscription promo code, I don't know. But like I said, man, if you want to try out Trace, you can go for it. And on that point, man, I hear a lot of people say this is expensive at $2.99 a month, and I fully understand. We had to increase our monthly data cost by 5 figures for the new Trace map, and that's on top of a number that's probably pushing 6 figures a month now for data. When you include not just the exchange data, which is huge, but it's not a light infrastructure for all this. So we're spending a ton of money and we're investing in the platform. We're a for-profit business. I'm not going to pretend that this is a charity function, but we're trying to be reasonable. I think everyone here, you always want a business to make money, then they can invest in themselves, right? So. But I bring this up because we're not moving the price.
All right, nice little rally here so far off the low.
You're locked in. We've never changed the price on anybody. And so if you want to try this out and you're like, look, it didn't make sense for me before, I want you to try it. So email it info@spotgame.com. Be like, look, Brent said on the Zoom, I can try out Trace for a week or whatever. Cool. But know that this is a huge increase in market data costs. And so, I hope that increase in cost makes the platform more valuable, because that would suck if it's just like spend all this money and it's like, okay. Fred's asking, since the vol is so elevated, what's the impact of the JP Morgan position being rolled at such high vol levels? Historically, the VIX does not remain elevated for long unless a major economic downturn is unfolding. Well, the argument, obviously that I've been making is that the vol expansion, or the VIX over 30, is where things really start to break. Now, if I show you a chart to back that idea up a little bit, here. Okay, this chart is admittedly a little bit noisy, but the rub here is that, and the thing I've been complaining about, and you've heard me complain about this now, unless you're brand new here, that vol is not realizing. What does that mean? We're not getting the underlying moves that generally justify this much risk, right? Now, the VIX at 30 is super rich. Vol is rich relative to the fact that the market isn't moving. Now, how does that frame up historically? So what I did was show me when the VIX first crosses a given number, show me what the realized vol was into that move. What does that mean? How much was the S&P moving when the VIX first went across 20, 25, 30, 40, etc. Hopefully that makes sense. And then what did it do after that? Okay. So what you find is this is annualized vol right here. I said before we're at 14 realized vol. Last week we're at 12, so that's in this general range, right? So can we draw a cute little square in here? Maybe JT's hot. Okay. So this horribly drawn zone, right, is 10% realized vol to 15% realized vol for the SPX, right? Makes sense? So when we went above VIX 25, what you see is that you can make the case that realized S&P vol of 15, 16, 17, that's where a lot of times it is. And you can make the case it is actually a little bit higher, low 20s, right? So when VIX goes above 25, most of the time, S&P realized vol is somewhere between 15 and 25, right? What does that mean? Well, if you do the math here, right, 16% realized vol, or 16% or 16 VIX, divide that by 16 is the dirty math, that equals 1. What is that 1%? Daily move in the S&P. Call it the rule of 16. So normally the market is moving at 1 to 1.5% is what this is telling you. right? When the VIX goes above 25. The VIX now went above 30. We just had our first 1.75% downside day. We're currently realizing in the 1 month space 15, which means moves less than 1% a day, right? How weird is that when the VIX goes above 30? Realized vol tends to be 20 to 30. That's double. 15 times 2. 30. What is 30? 30 is 1.5% moves in the S&P. 32% vol equals 2% moves in the S&P. So when I say if we finally get that pukey 2, 3, 4% downside move, because like JP Morgan's gone, what do you think the VIX is going to be? It's going to be higher than 32 because there's got to be that premium. We have 15-point vol premium. So if we go realized vol of 26 or let's say 30, then you're talking VIX 45 based on current premium. So, this is the thing. Like the market is so weird. You go, well, zero DT and correlation trading, dispersion trading. Blah, 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 blah. Is this different, or it's just like, oh, it took a second, which makes you think back to February 2020 when it's like you see people dying in the streets in China, and like you're like, this COVID thing looks pretty bad. The market doesn't seem to care. And then all of a sudden, Feb OPEX, and it was like to the day, oh dang. Okay, JP Morgan chart I just showed everybody was like, this is carrying all at once to me, right? I don't remember, exactly what this was, a tweet or something, but you could easily be like, this is the day they put those 10,000 troops in that they said they weren't going to. Oh, this is now full. I hope it doesn't happen, but you understand what I'm getting at, right? Like it gets, we start realizing is the point. And what was that, right? We went from 5,500 to 4,900. That's a 10% move. Totally reasonable. On any other given day, you go back to Brent, you're not going to have 10% in like a week. I'm not saying it's happening. I'm saying it's reasonable, right? And normally, in northern market environment, we'd be like, that makes sense to me. Totally reasonable, right? So, we also have a scenario, where the market moved up 10% an hour and the tariff was enough. 100% AM. Like I was talking, I put this tweet out on Friday, saying who wants to short vol into the weekend, right? And some snarky guys are like, oh, inverse Jim Cramer. Not understanding what vol is. Vol works both ways. 5% down is just as easy as 5% now. Imagine if they sign a deal. We're at 6,600, probably in 2 ticks, meaning 2 1-minute candles probably put us at 6,600, right? It's insane. Now, vol immediately would die after that initial move, but for that minute or 2 or whatever it is, like, holy cow. So, yeah, stability gauge there, Jay, on the new trace needs to get reset tonight. If you look at standard production trace for everybody else, you're at a much lower stability rate. So please ignore this for the time being. The stability gauge is telling us the same thing. Market makers have a lot of negative gamma, you get more vol. So low stability. High stability, market makers have positive gamma, you get vol suppression. Stability gauge today broken, tomorrow will be fine. Figure out, before it tweets. So you have this opportunity for, just unbelievable volatility either way. And that's the critical thing here. That's what makes this so challenging. Is a tweet is all it takes to move this thing up 5% and just murder shorts. I don't know necessarily what comes next because of the JP Morgan position. I'm like willing to bet on some upside here. And I can do it pretty cheap with the call ratio. I don't want to own put ratio. Why? Because if the market crashes, then VIX goes to 50, right? And then your 1x2 there looks awful. Whereas if the market rips 5%, it's probably 5% move, no, not big, 3% move, and then vol dies. Back on the maintaining, and then vol comes out, which is why.
All right, we're not able to push off of this low.
Make money on that lower put, and then those start to decay after the first move. Yuan saying spot gamma.
Looks like we're going to go lower. I don't know. My guess is that the 50, the 20 days rolling over is going to cross through the 200 day.
Indicator is not something that I pay a ton of attention to, to be honest.
Okay.
We added that
50 days there.
hot topic.
200 day.
Have a ton of value now. Some people still watch it, look at it. Just being William, see me talk about it a lot. It's kind of very
All right, there's just nothing to do here. Market is like chop, chop.
Hero monitors the options flow of all listed U.S. options, right? There's no such thing as dark pools in options. There's no off-exchange printing. Print has to take place on one of the 16 options exchanges, full stop. So right now we're looking at Hero. We see minus $4 billion in the S&P 500 complex. Is that big? Well, we've done as big as 14 billion in the last 30 days. So 4 billion is a good number. And you can see right after about noon, that purple bar is just going lower. And it's starting to separate from 0 DTE. Why does that matter? Because people are putting on negative delta bets now for something other than today, which, you know, is historically not a great sign, right? Meaning that people are bearish outside of this afternoon. If a lot of this was only 0 DTE flow, you'd be like, just kind of intraday noise, day traders pushing stuff around. So every single time an option trade takes place, we look at the market maker's potential exposure there, and we put this in dollar figures. So it's $4 billion of negative deltas today at a maximum level. Why do I say maximum? Because some trades are market makers to another market maker or whatever it may be, right? So some of these prints may not figure into that dealer hedging calculation, but there's no way anybody.
All right, Apple fading off of that bounce earlier.
What we end up with is a trend of all flow, and that trend is proving to be very useful. Knowing that if you were to add up exactly who did what, you would come out with some number that is obviously not, it's going to be less than that, right? Maybe it's only 2 billion, for example. S&P equity space, flattish, right? And actually this morning was looking pretty positive. As you can see here, we got almost $1 billion positive, and then around noon it all fell apart again. I don't know if there's tweets going on or what. We've been kind of busy. So this was looking very bullish this morning. Longer dated flow coming in versus 0 DT or next expiration flow. And that all fell apart around 11:50. And I don't know if tweets came out or whatever it may be. But when you're looking at this, that is not a good look, period, right? That trend, that flow is not going in the right way. This flow, not going in the right way at all, right? Minus 4 billion, Hero's still going lower. You take that and you combine it with what's going on in Trace, and Trace says, there's no positive game of any kind at the moment until 62.35. You make the case that there's some 0 DT small strikes around 6,300. So that's another % lower from here. And as long as Hero's going lower, when am I going to start to buy a dip? If you're going to be the best of case scenarios, 63.35, there's a couple of small strikes.
Yeah, it looks like we're going to roll over here. You hear Brett talking.
Doesn't give me a ton of confidence. This was 99 percentile strikes, then okay. But you know, this doesn't look good. And this is somebody sitting here on long call flies looking for a market bounce that I can talk about how awesome I am. You know, that's not looking good at this moment, right? Because that negative Hero is what that's saying is traders are selling calls and buying puts, which puts negative delta flow into the dealers. That means that they have downside hedging to do. And they have downside hedging to do into a negative gamma environment. What happens in a negative gamma environment? When the market goes lower, they have to sell more futures. So Hero is telling you that the flows are pushing dealers lower into a negative gamma market. Not great. So this is the most real time of influence you can get, right? Is this. The lower this goes, you know, the trend lower, the worse it gets. S&P 500, obviously, you know, maybe it's going to offer a bounce. Some people are saying, how do I know when the flow is trended? In other words, how do I know when the flow broke from this level to going up? Kind of like a moving average on a stock. It's hard to always know, like, oh, the trend has changed. And then I talked about how you can come in here on Friday and you can add in moving averages, which I found to be helpful.
Swarmer trying to take the high today. Swarmer. Swarmer's trying to take out the high today.
Okay, 10-minute Heroes cross the 30-minute Hero.
There's a few stocks that momentum traders are into. Looks like this is one.
Not try to overthink it, right? Because that metric told me that the flow is changing. I think it's a totally reasonable way to go about it. And it's a reasonable guess. And obviously with VIX higher, let's wrap up here with a look of vol, right? So vol is oftentimes I view that as the truth, right? Why is it the truth? Because you could have short-term flows, person underlying trade, JP Morgan, whatever, and the vol surface shouldn't change that much, particularly for longer date options, right? When you look out past a week or so, you would say, hey, that vol is going to be pretty stable, irrespective of short-term flows. So, for example, we rallied 2%, but like put skew for 2 weeks, 1 month options doesn't come in. You're like, oh, that doesn't look good. People aren't taking their hedges off. So when I turn this to low and I just say, let's go to year. So this is comparing the implied vols, right, for today right now versus Friday's close, right? So how did this Friday at 4 p.m., 3:45 specifically, right? What do the vols right now look like versus the vols back then? What do you see? Flatter across the board, just slightly down. That's into the fact that the market is actually lower on the day. And, you know, VIX is pretty flat, but oil is up a lot. So why is this? I don't know if that rumor is true about a possible 4 p.m. thing. I don't know if Trump's tweet this morning was real about maybe a deal. Could be, couldn't be. JP Morgan position and the hedges were let us. That's suppressing a little bit of vol. Was vol just bid up on Friday night because it's a weekend risk and people weren't going to go short vol on the weekend? All of those things could be true. It's just that right now we have lower vol. And if you look at the GEX this morning, again, it was reduced downside, right? So people look like they closed some puts up on Friday when vols were kind of going at highs, which kind of makes some sense, right? You want to sell puts when their vols the highs. And that includes like I own the put and then I want to sell it when vols the highs. So this is not, if we had this, but these numbers were all positive, this map would be a lot more bearish looking than now. And now it's like, it's a very weak tape. Don't get me wrong. And the fact that oil's up $3 there, you're like, you're holding your eyes like, that ain't good. But it doesn't look that bad yet, right? Because the vol's not really lifting. You know, we can. What if we have the situation where we stay pretty muted and the JP Morgan business goes away, then we just puke? That's another one. You're like, okay, you know, like maybe that's the sneaky thing is that we don't get the rally, the 1% rally into the strike, and it did somehow offer some support, and then we just kind of puke. Maybe Trump tweets at 4, there's no deal, and Iran's going to, you know, get further obliterated or whatever. MGTX. Don't matter what the JP Morgan strike is, right? So. You know, those are the tea leaves. You know, that's the interesting thing. I don't know what the poly market had some really very, very nasty moves on Friday. U.S. forces, I don't know if this has really changed at all. Yeah. MGTX. I'm find the chart on here. There she is. Yes, you see that, you know, it's starting to move up over this weekend and 70% now. So I don't know how good poly market is to fact check this stuff, but you know, this going up with oil going up. How many more times could Trump say he's got a deal for markets like? I just don't believe this anymore. I need stability. Right? So,
yep.
Yeah, no one on poly market getting advanced info is, I think, right way to think about it. So the vol not going higher is, you know, me thinking
down volume still leading all day.
But if vol was going up, I'd be more like, oh no. It's like I still have this glimmer of hope we rally a little
2 to 1 down volume on the Qs. 2 to 1 on the Qs. That's the worst for now.
And I would love to, again, I would be
1 to 1 on the New York Stock Exchange. Let's take a look at the New York Stock Exchange. Junk bond still off.
It is a little, it's counterintuitive that the vol, fixed strike vol is coming in even though the market is going down.
All right, this does not look good. New York Stock Exchange.
Put monetization. Right? If those vols were higher, it would make more sense. Then I would be more concerned about extended downside as opposed to, you know, whatever this may be. It's a real you know, it's like what I was mentioning, writing the note this morning was hard. So many of the signals are just counterintuitive. And it's very, very murky. And I think if you were going to go back in the 5 or 6 years I've been writing notes, I think about 5 times have I said, this is a really bad situation, and I feel super strong. And there's probably been about a half a dozen times I don't get it. I would say the last time I really was totally confused for multiple days was when Archipelago, what was the fund? I was going to say Archipelago, but that's not right. Bill Huang. Archegos, thank you. All of our metrics got rolled over for like a week. And it was like, what is going on, man? I was like, I got to get a therapist and talk about my future here. It was like, oh, Archegos nuked. And it, like all these forced trades that went in the market that basically like.
Yeah, New York Stock Exchange looks like it's going to lose the 200-day. Tried to rally.
But you could be wrong and then understand it.
Momentum.
Way, right? Okay. You know, I missed the fact here that oil was going to go higher. It was I thought the market would go up, but you know, if Trump said, "I hate Iran, I'm bombing you," market's going to go down. I didn't think he'd do that. He did it, but it makes sense. I get it, right? Or it's like under no circumstance should the market be around like 3% a day or for 4 days or whatever. It's like this doesn't make any sense. It's like, oh. But you know, look, this is ugly. Here going down, negative gamma to 6,300. There's no real two ways about that at this moment. So you don't want to fight that, right? You don't want to fight that trend. So, all right, that's going to wrap her up for me. If you have any questions, email us info@spotgamma.com. I will be back on Thursday at the latest, and look for Trace updates. Most of you have by the time we talk on Thursday. Most of you have it. If you are in the essential crowd, you want to try out the alpha upgrade on this, give her a whirl. Check out the Spot Gamma support bot in Discord that is new. I want to get that to the site in some moments, but you'll see some more communications from us on the Trace upgrade as well.
Swarmer trying to take out the high.
Yeah, info@spotgamma.com. Thanks for watching. Webinar replays are available on the webinar replays page under resources, so you can check that out. It'll be an exciting day tomorrow. Maybe we'll do a live talk or live tape when the JP Morgan thing goes out. We'll see. So, all right. Thanks, everybody. Appreciate it. Good luck trading. Julio, you're welcome home. Appreciate you coming. Brett, any Duke fans out there? I didn't think you'd want to identify yourselves. That's right. As a UConn guy, that was pretty amazing. RJ, ha, aha. Yeah. I had to give it to somebody. All right. Well, maybe we'll see you on tomorrow, but we'll see you on latest Thursday. She must be a very sad daughter you got there, cousin Minnie. That's right. Just basketball. I'll see you all later.
All right, that was Brent over at Spot Gamma, giving us the lowdown. And basically what he's saying is pretty much what I've been saying, is that markets don't look good right now. So you should have some hedges. Mention some hedges that you might consider. SPX, what was the SPX? I want to see SPDN. SPDN. It's a one-time bearish ETF. It's trading at $10. What's the possibility that this pushes a bit higher? Okay. Yeah, Iron. It is what it is right now. Everything's getting washed out.
may resume in less than a minute.
Yeah, Corey, that won't work. When Brent's broadcasting, I can't put it on the stream because I'm broadcasting at the same time. So all I can do is talk about what he's talking about. I mean, you can pretty much follow what he's talking about. When he's talking about gamma, when he's talking about gamma, you know he's talking about either hero or trace, right? You can pretty much follow what he's talking about. When he was talking about volatility, the volatility dashboard, and he's going out. Let's see, he was looking at expiration range 9 months. He went out a year, I believe. This is 330 right here at the top line. Top line is 330. That's today. Okay, and you see down here, things don't change that much. Term structure. Okay, that doesn't look different. Volatility skew. Fixed term structure. One thing he was talking about was the, Swarmer's trying to break out here. Swarmer breaking out. Swarmer breakout, new high of the day. There goes Swarmer. Swarmer's on the move. Yeah, so you should have some hedges on whatever you're looking at. SPDN, that's a one-time. That goes for $10, so that's a cheap insurance. Okay, Swarmer's going here. Okay, Swarmer going. Let's see. Swarmer's going.
SWMR.
Mm-hmm. There goes Swarmer. Okay, we're starting to move here. 42. SWMR. Let's see if there's something going on here. No, nothing new. Stock twits.
SWMR.
Okay, it's going. Okay, S&P's just sitting here. Swarmer's going. Swarmer CEO Alex Fink tells Steel Twits how their software lets one operator run dozens of or hundreds of drones simultaneously. We already know that. That's older. Swarmer. Okay, Swarmer. Nice pop there. If you're scalping it, we just went 38 to 43. That's $5 very quickly. Got to keep these on your radar. Have a chart. I have 10 screens, and one's devoted to stocks like this. Another is devoted to the New York Fang, which aren't doing much of anything. Another one, all the shorts that are currently in play, like SOXS, semiconductors, Swarmer's on there for a different reason. All right, most stocks don't look that great. Swarmer looks like people are. Oh, this is going now. Swarmer. Yeah, whenever they open the straight, that's going to be something. You know it's going to be soon too. At the rate of there goes Swarmer, ripping higher. Looks good for our day traders. Okay, it's looking good. Barbarin. All right, Bitcoin just can't get out of its own way. Bitcoin. I wish the Bitcoin could get something going. Wishing is not obviously a strategy. Everything else is like. There's a few stocks that have some momentum. What is ASTC? What is this? ASTC. Okay, that one's turning. ASTC looks pretty good. Cheap. ASTC. Cheapy. Ready to rock. ASTC looks pretty good there. ASTC. Astrotech. SWMR. Oh boy. Everything is moving lower for the most part. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, March 30. Brent was showing a really interesting graphic a bit. Let me show you what he was showing here, which I found very interesting. Let's see. Let me get this. Add a file. Let's see. Yeah. Okay, so this is the JP Morgan collar, and this is using Trace. This is using Trace as an overlay. Now you can see the way he's got this segmented. Okay, the one with the circle. Let me get rid of Swarmer here. I don't need that graphic. Let me just move that out of the way. Okay, you can see the 30th. is the first column. The second column is tomorrow's expiration. You can see that big red area there, the big red area on the screen. That's the JP Morgan collar. And what that's representing is all of the negative gamma the dealers have to hedge against. You can see on April 1st, Wednesday, that disappears. Now, there's two things that can happen here. Well, more than two, but the obvious is the support goes away. Okay, all that negative gamma goes away as well. So which way do we go? Smarter people than me are saying that they think we're going lower. Okay. We can definitely see that the supportive gamma that's there, I guess you could call it supportive, it's negative gamma. So when we get down into that zone below 6,500, down to 6,400, there's an incentive for dealers to sell futures as the markets move lower. Equally, if we start to rally, we could get a 1 to 1.5% move very fast, very fast. Like Russell was just saying, he doesn't want to be short because you could get your head ripped off overnight. So what Russell's been doing is to play futures, to trade the futures. Yeah. Yeah, Russell, the way I would do it is the way you did it. You know, I wouldn't have a position open, a big short, but after hours, you know, you could always hit it with futures, which is what you did last night, which was really cool. I was watching that trade as well. I was too busy with the watch list and everything, so I didn't trade it. But that was a nice trade. Up 50 handles by the morning, and I'm sure your position was pretty large. Okay, so anyway, that's the JP Morgan collar. It goes away tomorrow, and you can see Wednesday, Thursday, nothing there at this point. So we have to wait for positions to fill in, and we're still waiting for this March into April bounce, which is convoluted with the Iran news, oil over $100 per barrel, VIX at highs, and persistently at highs, trending. Junk bonds at lows, the dollar at highs, gold and silver backing off. So most of our regular indicators are not working right now. So it's hard to do too much, knowing that all it would take is a tweet. Okay, Swarmer. Okay, pulling back a little bit, Swarmer. Okay. Okay, they do that a lot. Okay, so they come in, they hit it with a couple of thousand shares. Elaborate. Elaborate, Russell. If you guys remember E.F. Hutton back in the day, that's what Russell is. That's what Russell is. Russell's wrong sometimes, just like the rest of us, but the majority of the time he's right, and right in the big way. So when E.F. Hutton speaks, people listen. Remember that? Remember that? Okay. Back down to the lows. S&P back down to the lows. So here you go. SPDN is a way to hedge, cheap way to hedge. SPDN is a cheap hedge. 1 times SPX short. Okay. All right. So we're making new lows here. New lows. New lows. Oh boy. New lows. All right. SOXS. Chips continue to get whacked. What are yields doing? Are yields back up? US 10-year. Interesting that I think TradingView shows 4.3%. TradingView 4.3%. 4.3. TradingView. TNX 4.3. And yeah, 4.3, but it doesn't show a gap down because it trades, I guess it trades real time there. So 10-year yield. Let's look at the correlations. Core 1M, I was looking at that earlier. That's the exact opposite of what we typically see. Core 1M, I won't say typically, but when Core 1M is below 8, that means calls are super expensive. Now we got the opposite. Puts are super expensive. People looking for downside. Core 1M. Okay, if you zoom out on this, this is stock. This is stock plus index vol. Stock vol plus index vol. Okay, and when these are really elevated, that's telling you puts are super expensive. VIX is up. Brent was talking about the possibility of VIX hitting 45. The way there's a discrepancy between realized vol and the VIX right now of about 10 points, which makes this 45 possible. Unlike previous occasions where VIX popped and then dropped immediately, okay, in October, November, this has been sustained for the last few weeks since the January. Started coming off the low. I had 20-30 call spreads on VIX. Those expire. Those expired March last week, but I took them off too early, unfortunately. I was going to roll them. I never did. So if you rolled any of your VIX, I would hold on to them. S&P. Yeah, and I'm not aware that people were calling a bottom, just pointing out the oversold conditions here with a washout low in stocks tends to be an area where you want to start paying attention. TNX 10-year. The 10-year needs to drop. Okay. Very quiet.
These indicators saying there could be a bounce in here, but we also know what this means in terms of fundamentals, right? Like the technical bounce may happen. I think this morning it happened briefly before it peters off. The fundamental bounce is we will be waiting for the resolution. So I guess near term, maybe next few days, slight bounce because of oversold conditions. But we could stay oversold longer, and that's what happened in 22 and 25 as well. Above all, which is not as aggressively oversold yet. I guess that the S&P has to go down several more percentage points before we are truly, I believe, deeply oversold.
Your chart of the war portfolio that was on its way up and a rebound portfolio that pulled back. Tell me the difference. What does that mean for an investor today? What should they be doing exactly?
Yeah, I think it's good to get to that, Nicole, because we have to trade this market either way, right? Like, you know, we can't sit in cash, or we can, but it's, you gotta make investments. So I thought of this idea saying, you gotta have a war portfolio, which is a lot of energy, still some gold in there, some bonds and hard large cap stocks, which are hedge against inflation long term, and an alternative like Bitcoin, a store of alternative value. And that portfolio has done fairly well over the past month. Volatility is in there, but it's done really well because of energy against what I call the rebound portfolio. It is important we talk about. We're in oversold conditions, and we're dealing with a conflict that at some point leads to a resolution, whatever it will be, this week, next week, whatever it will be. The rebound I will set in for sure, right? And that's where the big upside is. Rebound stocks are consumer discretionary, home builders, software, we sold off the last month, the S&P. Big gap. Currently, the war portfolio is outperforming, unsurprising. I do think that picture will change once that rebound starts to happen. So I'm more than positioning myself in that rebound portfolio over the next number of days. I do think we'll get some kind of resolution because the pressure is really high on the global economy if this continues.
Okay, Swarmer. All right, looking for a bounce there.
Again, so I think you should stick with gold, right? Because gold is a good hedge against anything. That has done well, but I think it has more upside for GLD against, the rebound portfolio. Yeah, rebound portfolio. Yeah, go ahead.
Where do you think we are by the end of the year? I mean, a lot of folks have 7,600 plus.
Okay, S&P 500 testing those lows, Friday lows. Invariably, a lot of people will buy puts down here at the low of the day. People will buy puts at the low of the day. Not the best time to buy puts. Just buy puts at the highs when we start to fade back below VWAP. Obviously, hindsight, but market is very bearish until it's not. Everything is pointing lower. Need to see some follow through. Okay. Weighted is below minus 400.
At the same time, it also relies a lot on is this trade seeing more straight over more seeing more flow coming through every day. And the expectations of 150 will change. And because we're in tail risk again.
Let's see what the NASDAQ looks like. NDX, ND, futures. Okay, NQ. All right. NQ. What are we doing, NQ? NQ. Yeah, looking for these to bounce at some point. Right now, the markets are just testing the lows. Friday, we're below Friday's low now. Cash. Market hours levels. Okay, so we close market hours, close there just off the low Friday. If you're concerned that you need some hedges, one to look at is SPDN. Okay, this is the hourly. Over the last several weeks through March, this has been marching higher. Okay, making new highs now.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Okay, Swarmer looks like it wants to go back. Swarmer is trying to bounce. I'm just going to watch a few of these more bullish trades for now. Swarmer turning back up. Oh, and when I saw the comments this morning about futures being up, I thought we might get a reprieve for a couple of days and, bounce a little bit higher back to the 200-day. To be clear, if we get back to the 200-day, I'm very, very interested in potentially taking a hedge unless we just blast right through it on a tweet or whatever. If we get back to the 200-day, S&P gets back to the 200-day, I'd definitely be interested in another hedge. Oh, let's see. XII. One of the tells here is that institutions continue to sell. XII, the ARC Institutional Index, they keep selling these 75 stocks most commonly held in their core portfolios. So normally we would see this rising. Okay. Normally you would see this and it would be green and blue elder sticks. Let's go to the weekly. Okay. So we rolled over about 10 weeks ago. And on week 9 weeks earlier, we just started to lose it. And just continue this path lower. So this needs to base at a minimum, like over here. He's been saying that for weeks now. Brian Sullivan.
During a 4-year presidential cycle, this quarter has an average return of negative 2.8% since 1950.
Yeah, we're down 10% already. So
This quarter, this year, is historically the worst. And remember, during a midterm election year, which is this year, markets also historically fall about 15%. But if you're a longer-term investor, don't you want to buy low and sell high? Let's find out more on that and more.
okay. So we're getting there. Getting there. RSI is oversold. Potential for this to turn back up. RSI oversold. MACD and Stochastics oversold. Stochastics is bound. MACD is unbound. So this could go lower. Stochastics contained can only go to 0 and stay down there. Seen a lot of extremes. Keep hoping for a bounce. Number of stocks trading above the 20-day at washout level lows. Interesting part is back in April, the Independence Day, back in February, March, April, we dropped 20%, more than 20%. And we're down 10% now. Crude oil at highs.
More importantly, the market is freaked out about agentic commerce.
45 months. It's hard to believe that Brent crude was above $100 for 45 months under Obama's 2 terms, yet the markets continue to move higher. Let's see, April, May, it dipped. April, May the next year, 11, it dipped. 2012, February, it dipped. 2015, we dipped. Yeah, I remember the 2015, 2016 pullback. That was pretty painful. That was like 20%, right? S&P 2015-16. Let's see, S&P 2000. Where we are? 2015-16. That was when Obama was in. Inflation was 2%. We dropped 15%. 15%, made a lower low, and then bounced and followed through into the election. Now look at 2015-16. All right, Obama was in office. We just told you that crude oil. Let me just pull that chart back up. Okay, so back in 2015-16, Brent, 2015-16, right here, Brent, we had that double dip. Brent was actually falling during that time. Interesting. and industrial production, 2015-16, industrial production was dropping off. Look at industrial production now. This is 2015-16 on the far left here. This is 15. The peak is in 15. The dip is in 16. We rally back up. Crude oil dropped during that time. Crude oil is up. Industrial production is up. Stocks are getting washed out. We're entering April. All we can do, as many of you are saying, all we can do is wait until we see the reversal in the S&P. For now, markets are taking the low road. S&P 500. Okay, making new lows. 60-minute continues to move lower. All right, SPDN. One time. Okay, hasn't moved much. S&P 500. S&P 500 making new lows. 60. Wow, I can't believe 6340. I mean, we were just talking 6,800, 6,900. And what would happen if we lost 6,800? Back when we were talking in February, March, we were talking if we lost 6,800, the possibility of a test of 6,500 was in the cards. Money Magic, I can't remember what you said. I think it was on the Qs, though. I think you were saying on the Qs at the time that you were looking at 600, I want to say, 600. or was it 560? One of those numbers rings a bell. Money, if you're listening. Anyway. All right, S&P continues lower. Swarmer trying to get back up to the highs.
MSTZ. ANA.
Swarmer still pushing higher. S&P lower.
Right. So what do you think are some best bets? How to go about this, Bill?
Yeah, we certainly are. And I think in Logan International, we're looking at the larger developed market companies. So they compete against the U.S. companies. We think they should be valued accordingly. So in that sense, that's why we think in healthcare space, when you're looking at Roche, Sanofi, and Novartis, you're going to want to look at that versus Lilly and Pfizer and Merck and things like that. And that's where we think there's value there. But I think the good news is the value is pretty widespread across different sectors, across different geographies, supporting international equities. But on the value front, from a more global perspective, I think there is good value still in U.S. financials, in pockets of healthcare, consumer staples. And so there's still a lot of good opportunities for a good active manager today.
And John, what do you think? Because we did get in the German German CPI, which actually rose, right? There's the concerns about inflation. The global PMI showed some weakness, so they may
S&P continues to move lower.
but should a portfolio have this exposure abroad and at home? John, what would be some examples?
Yeah, I do think there's a place for international stocks in a portfolio. There's some diversification benefits from owning international stocks. And I do think there prior to this conflict were a couple of emerging growth themes internationally in certain regions. I will say index level valuations comparing U.S. international. In my experience, when you really slice it and dice it, it just doesn't tell the full story. I think
All the New York Fangs lower. Some worse than others. Microsoft. I can't believe Microsoft just keeps doing this. Keeps pulling back. At this point, if you haven't done anything, at this point, it's best to probably just wait for the markets wait for the markets to give you a clear sign that we're going to bounce and follow through. If you're day trading, it's one thing, but for swing traders, I keep looking at the TRBCX. I want to buy some, but that's probably going to be end of the week at the earliest. TRBCX. Okay, it's off 17% from the all-time highs. We made 177%, more or less. We took this off near the blue dot when we started to lose the 10 EMA. The 10 EMA rolled over. So we need the opposite, like over here in April, to consider a long. That was a 20% move lower back in April. Okay. 23%. 23% there. Best to just stay in cash for now. The more you have, the better. When we actually do bounce. You can sense people are hesitant to do anything. There's no bid in the market. Okay. New York Fangs are all lower. Swarmer is moving higher. Swarmer trying to retake the highs. Swarmer. Okay, I'm going to take a 2-minute break. I'll be right back. I'm your host, Cousin Benny, coming to you from theclosingprint.com. We're coming into Power Hour, 3 o'clock. We got a negative, what is that, Grover? A negative 485 on the Qs. 485, negative 485. Okay, let me take a 2-minute break. I'll be right back. Oh boy. Yeah, this market is just plucked. Yeah, minus 561. Okay, Swarmer's trying to get back up to the highs. It's the only thing that's moving higher at the moment. Except for inverse funds, obviously. SOXS for the semiconductors at the high of the day. SOXS. Inverse funds, they're all at the highs. Markets at the lows. Tesla just can't get out of its own way. They're supposed to be IPOing SpaceX soon. Throwing away the good with the bad. People seem to be throwing away the good with the bad. People taking profits. All right. Swarmer's trying to break out. S&P is continuing to drop off. MSTZ, no. Bitcoin has pulled back. Okay, SWMR is about to break out. Swarmer.
Low ticker alert minus 800.
S&P continues to ramp lower.
establishments around the world. And so unlike, say, Restaurant Depot's customers, who typically shop more frequent visits as well as larger volumes, and more of that white glove service. And so they're set to really fund a portion of this deal with roughly $21 billion of their new and hybrid debt, along with $1 billion of cash and equity that they already have on hand.
So Swarmer, it looks like management has a 180 day lockup. Swarmer management has a 180-day lockup. They could technically offer a follow-on offering, but there are significant hurdles regarding who can sell and how it's structured. Insiders can only sell before this date if the lead underwriter, Lucid Capital Markets, grants a waiver. This typically only happens if a secondary offering is underwritten, meaning the bank manages the sale to institutional investors to prevent a price collapse. Swarmer itself, the corporation, obviously can choose to sell newly issued shares to raise more capital, often called a dilutive secondary or follow-on offering. Okay, S&P, just as nobody looking to buy. Looks like we're just going to continue to move lower. Whoa, moving lower here. Futures.
Low tick alert minus 800.
Okay, we're going to get a capitulation move here, it looks like. S&P. S&P is still moving lower. Okay. All right, so much for Friday's low. That doesn't even matter anymore. Oh, boy. Look at this move here.
Extreme low tick alert.
Okay, S&P still moving lower here. Baker Hughes. Big reversal on Baker Hughes. Interesting.
you're trying to guarantee really strong summer travel coming up when consumers are already paying a bit more than perhaps they're used to. And it's interesting to see how each different airline is approaching it globally. They're adding what they're just calling a fuel surcharge, so being very open about it. United is going to raise ticket prices. JetBlue is now putting it into their baggage fee. See what will feel most palatable summer travel season. Thanks, Jenny, for breaking all of that down for us. Our top movers today and some stocks that we saw making big moves and then giving up some of those gains in a few cases. But I do want to send it back to Sam for a look at what we have coming up.
Markets continue to move lower. Oh, yeah, that's not going to make too many people happy. The darkest before the dawn. Okay. Terrible, terrible, terrible. It's a good thing I didn't keep those put flies 65, 64, 6300. I didn't think we'd get down here that fast. It's a good thing I didn't keep them. Swarmer, SWMR at highs. Okay. Netflix continues to move lower. Netflix. Okay, that just fell off. It's probably going to move back down to the bottom of this range. Looks like institutions picking up shares. Arm Holdings. Okay. Netflix still pulling back. S&P doing the same. Minus 700, huh? Minus 700. Okay. Minus 699. Washout. Are we getting capitulation now? Probably. Capitulation. Yeah, looking for some capitulation.
So, Pete, with the VIX now above 30, I mean, you highlighted the volatility there. We're proving today that predictability is pretty much off the table, even though it's held for the last 4 or so weeks. We've been able to sort of follow this pattern. We're breaking the pattern today. As you mentioned on the Dow, we were up 400 plus points. Now we're down 40.
S&P is still sitting here. Swarmer, S&P 500. Yep. At this point, I'm waiting for institutions to do the heavy lifting. It's going to be obvious. It's going to take several days, I would imagine. Let's check the number of stocks above the 20-day. Those got to be pretty close to washout levels. Again, okay, right back down into the lows, the 20-day. That's not much change. 50-day, more stocks losing the 50-day. You got 80% of stocks below their 50-day moving average. You've got 84% of stocks below their 20-day moving average. The 200-day moving average, about 60% of stocks are below their 200-day. 55% or so. So, yeah, we're just waiting. This was a 20% pullback to begin the year. New York Stock Exchange, I would suspect that this has already lost the 200-day. It has. Okay, so the next low, the pivot low is over here, 20,900. The Dow Jones, remember, it broke 50,000, right? Dow Jones. Trump made a big deal out of it. We were above 50,000 for the first time. Here we are, 5,000 points lower. Not too bad. Not too bad. A lot of people are more than likely feeling the pain and are, if they haven't already thrown in the towel. Capitulation's what comes next. Interesting, though, we haven't had any. Do we have extreme low ticks? I think we did. Do I have? Interesting. Right now, tick is at minus 124. It's not like dropping off dramatically. Micron. Ooh, Micron's off 10%. Yikes. Micron's off 10%. Mm-hmm.
And Pete, as we're looking at oil right now, I'm looking at Brent. We're on pace for our biggest monthly surge that's on record as far as I could find. We're looking at WTI settling above $100 for
Mm-mm-mm-mm.
so we're now firmly in that above that psychologically important threshold there. Is oil, in your opinion, the single most important variable right now in the markets?
100%, yes. I think that's the first thing that everybody's looking at right now when they wake up in the morning. They want to see what's going on in the market. All they've got to do is take a look at WTI. Where is it? Is it above 100? I mean, it was just last week where we were flirting down there towards the upper 80s, 88, I believe, is what we were hitting. And then suddenly we bounced right off of that. We got back up towards 92, then it was 93, then it was 95, and then here we are today at 103. This is something that the second I see that, I know I've got to go over and look over at what the VIX is saying, because the VIX has been going in that same direction as we've been watching crude go to the north. You're seeing the same thing happen with the VIX, and it's very difficult. It's very difficult to find where you want to start to position. A lot of people it's time to start buying. I don't know that I believe in that. I'd like to see a little bit of something to show me that we are towards the bottom, and we aren't seeing that right now. We are seeing that hardcore selling, and today is a great example of that with the Dow. I mean, think about the movement today out of the Dow being up as much as 400 points, and then the selling that we started to see almost immediately and started to give some of that back.
Okay, minus 700. What do we got there, Grover? Minus 700. I'm looking at the NQ. Minus 733. Not doing anything, just sitting here watching the markets tear people up. Micron. NIO. S&P. Hands off. Obviously, hands off for now. If you haven't already taken some of these inverse ETFs, SPXS or SPXU, Okay. Mhm. QID, QID. Okay, that's at 24 and change. QID.
It's always great to have you on the show. Thank you for taking the time to be with us today. Pete Najarian, the co-owner of Market Rebellion. And coming up next, we're going to discuss the current investing landscape and why the traditional 60-40 portfolio just isn't holding up in this current environment. Market on Close. We'll be right back.
Mhm. All right, S&P. Let me go take a look at S&P here. And zoom out a bit here. Let's go to the weekly. Can we make it all the way back to 6150? So I see some people talking about 6150 now. The breakout level from last year after the April reversal. QID, S&P. Let's see. QID coming off the low. Mm-mm-mm. All right, just wait and see now. If you haven't done anything over the last few weeks, we've just been waiting for the S&P and stocks to get washed out. We're watching for signs of capitulation. That'll mean that people are throwing shares away, looking for institutions to come up, step up, and do some things. It looked like Microsoft was trying to do something earlier, and then it just fell flat on its face. Same thing with Amazon. Amazon looked really good earlier. Amazon was way up here inside of Friday's price action, but it looked like it was going to retrace a bit more. Didn't happen. They just sold into strength. Money flow, money flow. Let's see. Let's go look at the US dollar. US dollar. Okay. All right. You could trade UUP as well. UUP. Dollar continues to show strength. Gold and silver, GLD, gold. Still hanging out at 400, 410, the GLD ETF. Silver, crude oil making new highs. $130. Obviously, we've been saying this for weeks now, and most of you know that anyway. Crude oil needs to back off if we're going to get any sense of a bounce. That'll come with news, I imagine. We have junk bonds also need to catch a bid. Looked like it was doing okay this morning, then we faded. So this is still in a downtrend, 921 day. Breath looked good earlier today as well. Breath That's since tapered off a bit. Mid caps, small caps, Nasdaq. They look okay. Let me see what how many stocks are advancing, which is really odd. We got 239 stocks advancing. All right, so basically half of the S&P is advancing, the other half are declining. I guess the decliners are moving faster lower. We got a minus 750 here on Grover's weighted 750, 770. Yeah. You can sense the capitulation selling to for the most part. Maybe not quite there. Let's see. S&P. Joe DePel's MACD still firmly on sell signals. This started to turn down, give us sell signals back in January, February. We talked about that. Continues to show weakness. S&P. The Qs. Bitcoin, no bounce in Bitcoin. Q. Ay. QID. Wow. Wow. If you've been doing this long enough, you know that eventually the market's going to do the opposite. The bears have been looking forward to this for years, really, since 22. 22 is the last bear market. Last bear market. What are we off right now on the Qs? Qs. Let's just do a little calculation here. Qs. Okay, so the high Qs 635, and we're currently down 12.75%. The Qs, more or less 12.5 to 12.75%. And is there any support over here? Not a lot, right? IWM, that looked like it was going to bounce this morning. IWM, it lost the 200-day. Same thing with the New York Stock Exchange. So,
high took alert plus 800.
Okay, there you go. There's your reversal, Grover. Okay. With 23 minutes to go. 23 minutes to go. We got a high tick alert. Yeah, go, Tony. Good. Hold on to cash. New York Fangs, a little bit of short covering. Microsoft starting to turn back up. Tesla's at the low of the day. Netflix is trying to turn. Nvidia's seeing some short covering. I wouldn't put much behind it. Just shorts covering for now. Wow, the markets are getting clocked. Hate to say it, but these are the kind of opportunities. If you were smart enough to start collecting cash back in the late January, early February, when we talked about this, if you did do that, you're sitting on cash and you're not putting it to work. You're just going to wait. This too will turn. Remember, it's not too long ago, April of last year. April of last year, we had a nice drawdown, 22%, 23%. It felt terrible on the way down, and then eventually we caught a bid, and then everybody forgot about it into the highs January, and then February we rolled over, lost the 10 EMA. So right now this was a markup from weeks ago. About 8 weeks ago, we marked this up. Looking at the potential buy zone, or is it going to be the trend line that's extended out to the bear market low, and where the market started to catch some buyers stepping up into 23? What is the typical? Let's see. What? Okay. Typical bear markets, I believe, are anywhere from 3.5 to 5 years. Long-term average is about 60 months. Anywhere from 42 to 60 months. Okay. So we're right at around 38 to 40. We're close. I mean, this could turn out to be another bear market. Hopefully we bounce before then. You are aware that the tendency in midterm election years, which we are in right now, midterm election years, we were down some 20% from the highs during 2018, the midterms. Okay, in Trump's first term, this was later in the year, September, October. But look at February. February, very similar midterm election year. We had a drop and a bounce and another drop. We bounced in April, okay, 2018, Trump's first term. Now, I don't want to make too much of this, but this is the time of year where we start to look for a bounce. So when it happens, you'll see it. It'll be very obvious. The New York Fangs will all of a sudden start to turn, and they'll have several days and several weeks of basing or price action rising. Right now, it's just the opposite. S&P just continues to fall off. Wow. It's never fun. It's never fun to see the markets pull back. We're all, for the most part, looking for, upside, bullish, inherently. Okay, we're starting to bounce now. S&P 500. Hope everyone's having a good day. I know it's difficult. It's frustrating. All those negative emotions taking control. But if you've been collecting cash, even if you haven't been collecting cash, you could sell some positions and accumulate some cash. Weed the garden. The ones that aren't working, the ones that are working the least, your laggards. Sell some of those laggards. When we do get a capitulation reversal, we'll have that opportunity. So I'm looking at the New York Fangs. All of these look pretty good at the levels that they're starting to reach at this point. I mean, NVIDIA at a 20 multiple, considering last year it was at like a 40 multiple this time of year, right? So getting cheaper, can get even cheaper. Just looks like short covering. That's all it is for now. Okay, we got 16 minutes to go. 16 minutes to go. The markets are getting beat. People are getting beat up. Collect cash. Sell your losers. Especially if you're down 5%, 6%. If you've got into something recently, you're down 5 to 6, 7%. Instead of waiting for it to be down 10%, hoping for it to bounce is not a strategy. So I would be taking things off. If you're hitting a 5% threshold on your stop, I'd definitely be considering accumulating some cash. You want the position to be working in your favor. If you originally took it as a long and you're down 5%, it's doing the exact opposite of what you're looking for. S&P is starting to rally a bit here. So let's go see what Trace looks like. Trace. Yeah. Pretty beat up, right? Pretty beat up. So Robinhood is down because it's being excluded from the SpaceX IPO. Mm-hmm. Okay, just grinding off the low, a little bit more short covering off the low. The extreme ticks today weren't that bad, actually. On the downside, they were about minus 1,100. Certainly not capitulation. So we could see more of this. Give you peace of mind. Grab some of these short ETFs, inverse funds. Like QID. Tech is probably going to continue to catch hell. Okay. Oh boy. Carter Worth looks like hasn't shaved in a while. What's he talking about? Let me see what he's talking about. Carter Worth.
They must be doing it well. They're performing well. People want their products and their services, and they're up. If it stops going down for 3 years, it doesn't matter what they're doing. They're not doing it well.
momentum, price, there's risen in price. So always and forever trying to start the process, whether it's fundamentals or otherwise, with the study of price.
There's a contrarian twist you point out here too. The street sees only, right? Is Rental only 2% upside?
Yeah, so the stock's down a bit today, right? 4 or 5% with the market being down. But as of last night's close,
If you look at the 60-minute SPY, this is insignificant in a lot of respects. We hit 630. That was the puts that Bill mentioned earlier for April 2nd.
content and information and theories and thesis, but as stock pickers, it's generally a hopeless kind of thing. And so this group of very educated, certified individuals with MBAs and CPAs and they know computers, their price target is that we don't think it has much upside. That's a good contrarian thing. It's not loved by the street.
What's the big risk to this call?
Well, the big risk is that it stays cheap, right? It doesn't break out as I think it will. Then it is perennially stuck here at a low multiple, 12, 13 times. But that's not what the price estimate suggests to me. That's not what the valuation. It's low risk. So if it's wrong, I think you waste time. It's sideways, it grinds, it doesn't break out. But if it's right, it does. I don't think the third scenario, that it drops significantly, is in play.
All right, so you buy Dell. Let's talk about when you avoid it. All right, that would be GE Aerospace.
What's Dell doing since last week? Dell had a nice pop last week and faded. This seems to be what everything is doing. Micron, same thing. Micron. Okay, hit earnings and then faded the entire time since.
It's gone from 37 to 350. That's like a 9-bagger. That's way ahead of industrials, the sector it's in, way ahead of aerospace, the sub-industry that it's in, way ahead of the market. But then over the last month and a half, it is down twice the rate of industrials, down twice the rate of
GE Vernova and GE, those two off quite. Oh man, GE's off ugly.
and then starting to underperform. That's what a rolling over a bullish to bearish reversal.
Here's a 1-2 punch. You point out growth is slowing and valuation is stretched.
Well, there you go. So here's a stock that's trading at 7 times sales versus its peer group, the aerospace sub-industry group, at 3 times. It also, again, having had the 8-fold increase, and its earnings momentum is stalled, right? Its earnings growth rate anticipated this year from the first 14%, whereas last year 26%. It's the opposite. Dell has put up 3 years of 30% EPS growth and is estimated to be 50 this year. So they're very different setups, different companies, but it's the equal and opposite. One is a laggard Dell that has catch-up potential. One is a huge winner.
Google. All right, I'm seeing a lot of short covering now with 9 minutes to go. 9 minutes. New York Fangs.
This is the problem.
Short covering.
It's not. It's just the nature of the business. There's a thought that analysts raise their price targets and the stocks fall. It's the exact opposite. You can track this. It's an inverse correlation. The stocks move down, and it's I better lower my price target. It moves down again, it drops and gets to be lower. So this stock is starting to roll, underperform other aerospace, and underperform the industrials. And analysts have yet to.
Swarmer's up nearly 20%. It's off the best levels of the session. It was up over 42 there, 44. It looks like 44 got tagged.
What would have to happen in quarter for you to say, okay, I'm going from bear to bull on this one?
Well, it would have to start to stop doing what it's doing day to day, which is so. It's like the analogy is really an athlete, right? Let's take a picture.
Meta catching a bid, Google catching a bid. Google's been down. Google got whacked, right? Google. 200 days right there. Everything's resetting back to the 200 day for the most part. Tesla lost the 200 day, right? Yeah, it lost the 200 day. Tesla.
And so if you own it, take some measures, sell some calls, and trim your position. It's been a great winner, 37 to 350, and has all the elements of a rollover now.
Buy Dell, avoid GE Aerospace. All right, thank you, brother. Appreciate it.
GE Aerospace.
Buy or goodbye? Well, Bitcoin hovers near $67,000 token, well off its October high. Sean Bill, Bitcoin Standard Treasury Company chief.
GE Aerospace. Wow.
the state of the crypto market.
I think we're really at a
Tesla,
spot in the Bitcoin
S&P.
If you look at the move that you're talking about from, let's call it the 120,000 high in October down to the February 2nd lows at 60,100. That was driven by a lot of different macro factors. One being, I think, the 4-year cycle in Bitcoin. So not necessarily surprising that we had this sell-off. We did see it enhanced by retail selling and the ETFs. That got it going there. And then more recently, we learned about...
We've been waiting for a bounce in Bitcoin for 2 weeks now.
It's had a lot of pressure. But the great thing that I would point
They
out
keep selling into strength.
February, if you go back since February, Bitcoin's one of the better...
Only positions I have is BITX and Strategy. I have a little bit of Coinbase, CONL. That's about it. Longer term account.
Over the past month alone. But we are hearing rhetoric that this could sort of be, we could see a bottom in crypto stocks rather. We have Bernstein saying that we will see a bottom in crypto stocks into weak Q1 earnings. So do you think that we still have more room to move lower here, or have we hit the bottom yet? I know you're a long-term player on this, but what's your message to investors right now?
We're actually pretty positive on the outlook for Bitcoin. If you look at the charts, I'll tweet this on MacroCrunch on Twitter so people can see what I'm looking at. But basically, if you look at the low at 60,100, we would expect that to hold. If you look at the seasonals on the 4-year cycle, you're going to be coming into seasonal support for Bitcoin. Towards the end of this month, mid next month, we would expect that seasonal characteristic would start to kick in to the market. So we're actually pretty comfortable with the current levels of Bitcoin.
When you think about where we are within the real world sort of applications of this right now, where are we at, considering the fact that now we can even see...
Okay, Netflix catching a bid here. Netflix with 5 minutes to go. Netflix.
Yeah, we're very excited about that. So, there are Bitcoin companies like Milo and others
Okay.
that have been offering Bitcoin mortgages to individuals that hold substantial amounts of Bitcoin and couldn't access traditional markets. So now with the Fannie Mae guidance that
50 cents. Netflix ripping off the lows. A whole 50 cents.
broadly, so that more retail investors, more
High tick alert plus 800.
High tick alert.
productive asset. So we're very excited about what's happening in the mortgage space. We're also, we had the securitization of asset-based lending and also went through the market recently at, I think, about SOFR plus 335.
All right, got a nice little reversal here. S&P coming off the low.
Because now you have a securitized product that's rated by the agencies that is based on the price of Bitcoin as underlying asset securing the loan. So that was another really great development. I think between the let-in securitization and the Fannie Mae news on the accepting Bitcoin as a down payment for mortgages, that's definitely opening up the Bitcoin market to be an asset that can be utilized by investors.
Sean, really quickly, want to get your take. Year end, where do you see Bitcoin? Because right now what we're seeing from Polymarket odds is some predicting 80,000, some predicting 75,000, some predicting 50,000. Where exactly do you see this going as we make our way into 2026? How will we end this year?
I think in the near term, next, let's say, 6 to 12 months, you're probably going to be in the zone of, call it 60 to 90,000 on Bitcoin. That would make sense to me from a market structure standpoint. I think that in that range, you'll be basing out going sideways, if you will, which we think is a reasonable perspective on the market. Now, longer term, we're very bullish on Bitcoin. If you go out multiple years, 8 years, 5 years, we think that you'll have a strong tailwind to your investment in Bitcoin.
Sean Bell, thank you so much for taking the time. Appreciate it.
Yeah, I'm thinking the same thing, Scott. I was looking for something similar to what we saw here. I don't know. This just doesn't feel like it's a bottom. I keep looking for signals, but we don't have our first up week yet. So.
Draft your deal at Beach Buick GMC, your Grand Strand volume leader.
Get up to $14,000 off MSRP on a new 2026 GMC Sierra. Lease a new 2026 GMC Canyon for only $399 a month. Or take up to $5,000 off MSRP on a new 2026 Buick Encore. Plus, your new purchase is always backed by Beach with our $1,000 low price guarantee. Shop BeachGMC.com, winner of the GM Mark of Excellence Award.
Everyone has free offers on the latest phones, but T-Mobile gives a lot more. T-Mobile families save over $3,700.
Excuse me.
Compared to the other big guys in the past 5 years. Our experience plans include amazing benefits like Netflix, free Dash Pass by DoorDash, and a bunch more. Oh yeah, and a 5-year price guarantee. So you keep saving. Save on a big scale. Switch to T-Mobile and even pay off your old phone for $800.
Introducing the Jalapeno Ranch Club. Spicy, grilled, original, all ranch stuff.
Oh, sorry.
A buttermilk ranch bun, pickled jalapenos, and pepper jack cheese with a kick. Available for a limited time. Order ahead on the Chick-fil-A app.
Get spooky with Disney Magic Match 3D. Collect treasures like the Evil Queen's Heart Box and Jafar's hat as you dive into magical puzzles. Match items to clear the board. Each level is full of treats and a splash of
All right, that's the closing bell.
Disney characters like Ursula, Aladdin, and more.
All right, folks, I got a hard stop. Have a great evening, everyone. I know it's been kind of a disastrous few weeks here. For the past 7-8 weeks, we've just been straight down for the most part with a little bit of a reprieve at the 200-day, retested it, and then rolled over. For now, we're just waiting for that capitulation, waiting for institutions to show up. I haven't seen it yet, but we're looking for it. So we're collecting cash, selling some losers even to collect some cash, getting ready for that reversal where we can hang in there for 3 to 4 weeks, 6 months, however long. At any rate, that'll probably come tomorrow, if at the earliest. Have a great evening, everyone. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, March the 30th, and we're at the closing bell. Take care. Have a great evening, and we'll see you tomorrow. Ciao.